This is Mark Douglas, and I'm the author of The Disciplined Trader and Trading in the Zone. I've been a trading coach since 1982, and over the years, I've worked with some of the industry's biggest hedge fund and money managers, as well as some of the exchange's largest floor traders. I know that all of you want to experience consistent results from your trading. In other words, you want to be able to generate an income you can rely on. However, one of the major obstacles in trying to accomplish this objective is in the area of trade execution. To produce a consistent income, a trader has to be able to execute their trades without making any errors or mistakes. In other words, trading without hesitation, reservation, or internal conflict. Basically, all of the errors we are susceptible to are a result of a lack of confidence, or more specifically, trading with fear. What most people don't realize is that trading without fear is actually a learned trading skill, a skill that has to be cultivated and is the primary difference that separates the professional from the typical trader. In this series of DVDs, I'm going to provide you with the kind of insight, understanding, and specific mental techniques you'll need to learn to trade without fear, so that, like the professional, you can move in and out of your trades with the kind of confidence and ease that will allow you to take full advantage of your wise trade or any other trading methodology. Hey, hello. Yeah, good morning. And also, too, how many people came from the West Coast or in the West Coast time zone? Yeah, it's like the Wise Trade people picked me up at 6:30 in the morning, which was 4:30 in the morning for me. So when I say that, when I say this, we're here for you, and to ignore the cameras, ignore the environment, I really mean that. But at the same time, I want you guys to help me a little bit, okay? It might take me a little bit, to get going, because I'm not used to doing presentations at 6:30 in the morning my time or 7 o'clock in the morning my time. But anyway, what we're going to do is we're going to go through the process of learning how to think like a professional trader. Why would we want to learn how to think like a professional? Anybody got any ideas? What's that?
Make some money.
Make some money. But you don't have to think like a professional to make money, do you? What does it even imply? What does it imply to think like a professional trader? I mean, let me ask you this. How many you guys have, I don't know what your trading experience has been in terms of the number of years you've been at it, or kind of give me an idea of the demographics here of the audience. I mean, how many people have been trading for more than 2 or 3 years? Most everybody? Then less than 2 years? Kind of new people? Oh, okay, so we've got about half and half. What would it mean to you guys to say, well, let's think like a professional trader?
Then you're not thinking like an amateur.
What's that? Not thinking like an amateur. Okay, that's good. But what are the implications of the difference between a professional and an amateur?
Right, consistency.
Consistency. There you go. You see, you're at my Houston workshop, right? Yeah, consistency. Exactly. In other words, what that would imply is that if I'm a professional trader, in other words, if I've aspired to be a professional, one of the implications would be that I can make consistent money, because if I'm trading in the mode of a professional, I could be a hedge fund manager, a professional hedger working for trading companies, or just having a full-time job as a trader where my income, my sole income, is derived as a trader. And to be in that kind of a position, or to be in a position where other people are going to give you their money or give you their assets to be able to, make money for them, it would certainly imply that you can make consistent money. That there's a way for you to, let's say, create an equity curve that looks, something like this. Isn't that right? Are you going to give your money to somebody with an equity curve that looks like that? I'm not saying that people don't do it, and I'm not saying that it doesn't happen. But I'm saying that if I've aspired to be a professional trader, It means that I must have learned something that's different than the people who can't do this. There must be something about the way that I approach trading that allows me to do that. And believe me, there is. There's a lot. What's that? Yeah, cool. Basically, and I don't know how many people in the room have either read Trading in the Zone or The Disciplined Trader? We've got a few people. So probably there's actually most of the people in the group aren't familiar, maybe even with me or my background at all. True or not? Yes or no? See, no, right? Oh, okay. So I'm going to just give you a little bit, and I'll give you more later on. But I started trading back in 1978, and the first trade that I made, the first trade I made was in potato futures at the Chicago Mercantile Exchange, which they don't even trade potato futures anymore. Why I picked potato futures, I have no idea. I think that's probably what my broker said I should be trading. Maybe he said that there was an opportunity in potato futures, but anyway, I made money. And of course, just like most people who make money, their first trade or their second trade, it's about as easy as one could imagine, and therefore you think to yourself, oh my God, why didn't I learn about this a long time ago? That sounds kind of familiar, right? In terms of a thought process. And I went from trading potatoes to trading gold to trading silver. And I'd say my trading experience back then was probably typical, even to what it is today with most people, although you have to keep in mind that the technology that we had back then wasn't anything like what you have available to you right now today. It still boggles my mind when I think about the way we had to trade 25 years ago, or almost 30 years ago, compared to what's available right now. I mean, I've always been attracted more to trading commodities than stocks. As a matter of fact, I've never even traded stocks. I've always traded commodities and options. And I've never really had the desire to trade on the floor of the exchange. Although I lived in Chicago for 20 years, it never really appealed to me. I don't know how many people are familiar with the floor or the trading pits, but I just thought it was an extremely harsh environment, and not something that just, like I said, it appealed to me. But the kind of trading platforms that you guys have available to you today really, truly approximate what it would be like to have a seat at the Chicago Board of Trade or Chicago Mercantile Exchange and to trade at that level. You have instantaneous execution. And it's like you can change your mind and not feel humiliated or like, there's something wrong with you. You can put it in order, you can cancel it. Back, before the advent of electronic trading platforms, we used to have to call a broker. Now you think about the time you made a decision to put on a trade, you think about the time that it takes, one, to dial the phone, for someone to pick the phone up, how many times it has to ring, and then he gets on the other end of the line. You got your broker, and then you give your broker your order, and then you've got to deal with the fact that does your broker really approve of your order? In other words, what I mean by approve is that, well, see, I want to buy 3 gold contracts, and say, well, some of my biggest customers, they just went short gold. Now what are you going to do with that information, okay? Or I've got, X number of guys that are on the other side of that trade. I say, well, yeah, if you want to take the other side of their trade, that's fine with me. I'll put the order in. So it's like, so he could put the order in, and then, you've got to wait for a fill. I can't tell you how many times that I put orders in the market where they were limit orders because they didn't want to do a market order because I didn't want to get the slippage of a market order. So you do a limit order, and on a limit order, the market has to trade. To be guaranteed to fill, the market has to trade through your price, does it not? How many times has the market traded to your price, okay, just right to your price on a buy order and reversed, and you didn't get filled? That's very possible. The problem when you're doing it with a broker over the phone is that order goes into the pit. It goes to an executing broker in the pit itself. So you've got a runner, and the order got to go back to the runner, back to the phone bank, back to the broker, and the broker calls you with a fill. You're talking several minutes. Now, what if you're in a situation in a fast market where the market actually hit your price? You may have gotten filled, but you really don't know. You don't want to put a stop in the market because you don't even know if you're in or not. And the market's screaming, let's say, even in your favor, and you'd like to take profits, but you still haven't gotten your fill back yet. You don't even know if you're in the market. This is the kind of stuff we had to deal with all the time. All the time. It was a completely different world. Not only that, the only information that we had available to us was open, high, low, and close. That was it. Open, high, low, and close bars. And we used to have to get those unless we talked to our broker and pestered them, X number of times a day. You get it through the Wall Street Journal. We used to have to keep our own daily charts. Intraday stuff was just like non-existent. So anyway, I started trading like that. I went through, I don't even remember what my first trading account was. I think it was around $20,000. I lost all of that, and then, saved up some money and opened up another one for around 15, lost all of that, and then went to another broker, and I'm thinking this guy doesn't know what he's doing, and I'll find somebody who does. And then this is what really, this is probably the reason I'm even standing here today, was this particular trade, because this particular trade, it had a profound impact on me in terms of how it changed my life and what I was willing to do to find out what this was all about. To find out really what does it take to be a consistently successful trader? What does it take to really be able to earn an income as a trader? I was long silver. This would have been back in right around 1980 or 1981, or 1980, I think. I was long silver at around $9.75 an ounce, and there was two 5,000-ounce contracts at the COMEX. In other words, I was long 10,000 ounces of silver at $9.75 an ounce. And right after I got into the market dropped about 20 cents on me to about $9.55. So I was down $2,000. And my broker said, well, okay, here's what we're going to do. Instead of getting out, we'll put you into a spread. And so what we'll do is you're long 10,000 ounces of silver in New York. We'll go short 10,000 ounces of silver in Chicago, because you could trade Chicago silver at the Chicago Board of Trade. Everybody with me on this? Just want to make sure that you guys are all with, even though I know many of you are stock traders, the concept is the same, okay? So I'm long 10,000 at 975. He puts me short 10,000 at 955 in Chicago. So I've got this spread going on. And then he said, well, when the market goes back in your favor, we'll just take the short leg of the spread off. Now, keep in mind, back then, you guys are. What do you typically pay for commissions, even in commodities, or even I don't know what you'd pay for stocks, but typically the average commission is about $4 to $5 a round turn, right? That's what you'd expect to pay. No, what are you paying? Less?
No, more.
More? Round turn? Oh, really?
I got the lowest.
Well, you're in the Dow. You're in the Dow Mini. What are you paying for the Dow Mini?
11.
11.
Well, that's as low as it started at like 30.
Oh, okay. Well, anyway, then 11.
Paying 89 back in the day.
Oh, okay. Well, back then, back in the 80s, how much do you think we were paying back then? Come on, give me a guess. Come on. Guess. What? Yeah, 125. How's 125 a round turn? Per contract? So in other words, for me to put this trade on cost me $250. Okay? When he put this one on right here, it cost me another $250. And then he said, of course, that when the market goes back into my favor, he'll take the short leg of the spread off, and I should be all right. So that's exactly what the market did. The market went back up to right around the 975 area. He took the short leg of the spread off, and then the market immediately dropped back down another 20 cents and put the short leg of the spread back on again. So that's another $250, okay? Plus, he just locked in, when he took this off, first of all, he locked in a $2,000 loss by putting this trade on. When the market went back up to 975 and he took this off, he locked in another $2,000 loss. And then when it went back down again, he put it back on and locked in another $2,000 loss. Now I'm down $6,750. Okay? And then, of course, it happened 2 or 3 more times. Now, from the market's perspective, all the markets, the silver market's just in a trading range. That's all it is. It's just in a trading range. But I didn't know how to read chart patterns at the time and didn't really understand what was going on. I was just listening to him. And so what he was doing was just taking advantage of the fact that it was going back and forth between support and resistance and generating commissions for himself, okay? That was it. That's basically, he was just turning my account. But that's not the story, okay? That's happened to a lot of people. Of course, it happens less now because we're all responsible for the trades that we put on. All we have to do is click the mouse button, and it's not that much money. But here's the story, is that as these losses are mounting, okay, and I can't sleep and getting real stressed out. You know, I wake up one morning and I thought, you know what, this is it. I just can't take this anymore. I just can't take it. And so, you know, when I got to work, I called them and I said, you know what, just get out of the whole damn thing. I just can't do this. So just liquidate the position. Does anybody remember the Hunt Brothers silver debacle? Oh, it didn't. Does anybody, if I say the word limit up, does anybody understand what I mean by that? Okay, the exchanges will impose artificial price limits of how much a commodity, or even a stock for that matter, can fluctuate in any given day before they stop trading. So we don't have these kinds of moves too much anymore. But back in the 80s, limit moves were really quite common. They really were. In other words, what would happen is this: is that if the market went up, let's say, I think in silver it was 50 cents. I don't remember exactly what it was, but if the market went up by 50 cents, they would actually stop trading. Meaning, if the market was bid up to, let's say, in this case, $10.25, trading would stop. In essence, what this means is that at 10.25. There were no people, there wasn't anybody in the world, this is important for later on. There wasn't one person in the world who was willing to sell silver at 10.25 if it was a limit move. Not one person. And so what happens is that the price will go up seeking to find who will actually sell. So what the exchanges didn't want is there to be this huge fluctuation all in one day. There might have been sellers at 10.26, or there might have been sellers at $11, but you don't know that because the exchange says we're going to stop trading at 10.25. You guys with me on this? Okay? So what happened is that I don't think it happened more than maybe half an hour, 45 minutes after I got out. The market was trading right around $9.75 an ounce, where silver went limit up. And went limit up, was 30 days in a row to $49 an ounce. To $49 an ounce. I was looking now think about this, okay? Now think about being in this kind of a winning trade. Now, when we're in a winning trade, the market almost never goes straight up and it never goes straight down. There are rare occasions, of course, like in this case, when it does. So that when we're in a winning trade, we have to constantly be making decisions about where we're going to take profits and how much heat we can take with the market coming back against our position to say, well, is this a time to take profits? Or am I going to let it come back a little bit further? Am I going to come back a little bit further against me? Because, well, is this normal retracement or is this more significant, okay? Is this a little bit of a profit-taking retracement? Is it more significant? Should I get out now? Do we have more left? Are we going to make new highs? You got to be making all these kinds of decisions. And it's very difficult, as we all know, right? See, in this case, I didn't have to be making any decisions because the market went limit up 30 days in a row. Boom, boom. It was like, go ahead.
Were you out or were you still?
I was out. I just got out like a half an hour before it happened.
So you were just going, oh my God.
Oh, yeah. See, the problem is I couldn't even get back in because there wasn't anybody willing to take the other side of the buy orders. On a limit move, you can't get back in. So I sat back and watched in complete agony I mean intense, intense agony. I didn't throw up, but you know, it's like, maybe I almost did. I don't know. Go ahead.
Why didn't you get out? You said you had 5 contracts?
No, 2.
Two.
Just
Why
2.
don't you just take one off the table, let the other one run for another day?
First of all, Jerry, you're assuming that I knew that this was going to happen.
No, I'm assuming that getting out all at once takes you out of the play completely.
Jerry, have you ever been in a situation where you really lost a ton of money and you just can't deal with it anymore?
Yeah.
Well, that's
no,
where I was
I've been in
at.
a situation where I've been down a lot of money.
Okay.
I didn't lose because that's on paper.
No, well, commodities, no. With stocks, you're right. With stocks, it's technically on paper. When you're in commodities, the money's out of your account. It's gone. It's gone at the end of the day. Okay, it's not. This is not paper money. This is real money. Are you with me on this?
Yeah, I'm understanding you.
Okay. So I wasn't looking at you know, at, like I said, paper losses. The money was out of my account. So I'd had enough. I couldn't take it anymore. So when you think about it in that context, when you just made up your mind that I just can't deal with this anymore, it doesn't even occur to you to get out in stages. Why would I get out in stages when I've already gone through a week and a half of this back and forth, and you know, and it's virtually wiped out my account? Because by then I probably would have had to put more money, even for me to take just one contract off and leave one on, I probably would have had to put more money in the account. And I'm not. There just wasn't any point in doing that. Are you with me on this?
I don't trade commodities. I trade other things,
But the concept's the same.
except it doesn't come out of my. It's, as you said, it's a paper trade.
Yeah, you already own. You own stock. You own an asset.
I don't know.
And if you want to hold on to that asset until it goes down to zero, that's fine. Okay, your money is not flowing. In a sense, money's flowing out of your account, but not in the same way it is with a commodity.
No.
Okay, I have to pay that money right now. You're just losing the value of an asset. I actually have to pay that money. And it comes out every single day. Go ahead. Go ahead and hand the microphone back to that gentleman.
Well, another thing that can be of interest here is, at least from the way I gathered you was talking a while ago, you really weren't controlling this. Your broker was doing this.
Correct.
So even if you had wanted to get out in stages, your broker was doing it, saying, hey, here's what I'm doing to you in this case.
Yeah, pretty much. Yeah, it's like I wasn't really in control of the situation because I didn't know what I was doing. All I know is that I was within, let's say, a half an hour, 45 minutes of a monster trade. A monster trade. Yeah, I got it. And like I said, I sat back and watched in agony as the market went up to $49 an ounce. I'm thinking to myself, I was like that close to $400,000 on just 2 contracts. $400,000. And so, like I said, when I first started telling you this, this really had a profound impact on me. It really did. And I thought to myself, and at the time, I was managing a commercial casualty insurance agency in the suburbs of Detroit. Not really that's what I wanted to do. I didn't really know what I wanted to do, but you know, I aspired to management. I was very successful, and you know, at the time, you know, even back then in you know the late 70s, early 80s, was making a 6-figure income, and I was only in my early 30s. So you know, I really had a lot of things going for me. But you know, after this experience, I thought to myself, you know, and I got to figure out what's going on here, and I certainly wasn't going to be able to do it in Michigan. So I thought, you know what, I'm going to Chicago. And that's what I did. I went to Chicago. I just thought, you know, if I'm going to get into the business, who am I going to get into the business with? Well, back then there was Merrill Lynch, there's Dean Witter, Smith Barney, you know, and I thought, who are you going to pick? You pick Merrill Lynch, right? Okay, so I went over to the Chicago Board of Trade. They have an office right there, and right on the second floor of the Chicago Board of Trade. And they just so happened they had 3 openings for trainee brokers, and they had over 1,000 people applying for it. So how am I gonna be one of those 3 people? I thought, well, you know what? I went back home. I went to, you know, one of the bigger Merrill Lynch offices in the Detroit area, and I went through the whole employment process to familiarize myself with what it is that they required to get a job. And this is what I think got me that job at the Board of Trade. is that they had an aptitude test, and there's a multi-page application, but on the back of the application they had a square like this, you know, and they wanted spontaneously, while you're in the, you know, while you're filling this application out, spontaneously what they wanted you to do was to write like a little mini essay about some philosophical question. Before I went to the Board of Trade and actually filled out that application, I spent 2 weeks agonizing over every word, just to make sure every word of that 2 or 3 paragraphs that I wrote down was completely perfect. So that when I took the app, I wrote down exactly what I'd worked on. And I can imagine why they hired me, because if he thought that I wrote that spontaneously in the moment, but hey, this guy, we got to have this guy here. We got to have this guy. Okay, so I did. I got the job. Now think about this. Now, when I was working for the agency, the casualty agency, commercial casualty insurance, as a matter of fact, I just signed a contract not more than like 3 or 4 months before I actually went to work in Chicago, over a 3-year period for $360,000. And what Merrill Lynch was offering me was $20,000 on a draw. Okay, in other words, it was a, you know, they're going to give me $20,000, but it's a draw. I mean, I got to pay it back based on commissions. Now, if you can imagine, there wasn't one person in my life, not one person, who thought that I wasn't absolutely stark raving out of my mind to give that up, to go to Chicago to do this. So, you know, it wasn't like I had a lot of support. You know, and it wasn't like I wasn't catching a lot of grief from everybody that I knew about what it was that I was doing. So you can imagine my horror, is a good word for it. I mean, because when I got to Chicago, I'm thinking, why am I even doing this? I'm doing this because I'm going to Chicago because that's where the traders are. That's where the people are who know what they're doing. Correct? And then to get there to find out that that is not the case. That is not the case at all. That there were 40, almost 50 brokers in the office, and none of them knew how to trade. And not only did they not know how to trade, I mean, Merrill Lynch made absolutely no bones about the fact that we were not traders. They spent no money, no time, and completely discouraged us from even learning how to trade. We were salesmen. We were taught how to talk about trading. We were taught how to talk about investments. We were taught how to, you know, it's called dialing for dollars, to get on the phone and get people to open up accounts. And even though this was unspoken, I'd say the underlying philosophy behind the business was, especially in the commodities business, I'm not talking about the equities. I'm not saying that on the equity side of the business that it wasn't more reputable, but this was about as irreputable as it could be. Because the underlying philosophy that we operated from was, all commodity traders are terminal, meaning like they have a terminal illness. It's only a matter of time before they, when I say all commodity traders are terminal, and it is our job as a broker to make them as comfortable as possible until they expire. In other words, to extract as much money out of their account as you could until they're gone. And even to this day, it just blows me away to think that when I went to a 30-day training class in Manhattan, and there were brokers from all over the world, probably about 80 or 90 of us, and the guy and the person that was the head of Merrill Lynch Commodities at the time, his name was John Conheeney, and when he came in to address our class, and to this day I don't know why he did this, but he said hi, and he started out with these words: the average Merrill Lynch customer loses all their money in 6 months. And that was the commodities, not equities, commodities. And that was the truth. That was about what it was. It took about 6 months for people to lose their account, and you just, like I said, you just go to the next one. So here I left this 6-figure income to go to Chicago to learn about this business and this industry, and here I'm in a situation, and it's like, it was, like I said, it was appalling, absolutely appalling. So I thought, well, okay, I'll make friends with people on the floor. They must know what they're doing. The floor traders know what they're doing. Well, I found out that wasn't necessarily the case either. Now, it doesn't mean that the floor traders didn't know how to make money. But and this is, I'm not going to get into this because we don't have time. But even though what you do is called trading, And what they do, they call trading. The way and the mindset that you have to make money couldn't be further apart, even though they're both called trading. The typical local, when I mean the person who traded for their own account in the pit or on the floor of the exchange, the way they made money, almost they weren't trying to make direction related decisions. In other words, it wasn't the kind of trading where they would find themselves in winning trades that were going in their favor, but that's not the reason why they put the trade on. And like I said, I'm not going to get into the specifics or dynamics of it because it'd take me too long to explain, and it just isn't necessary for right now. All I'm saying is that it's a completely, as a matter of fact, before I left Chicago and moved to Arizona, the Chicago Mercantile Exchange asked me, and I worked on it for a while, for about 6 months before I left, asked me to put together a program to help floor traders make the transition from the floor to screen-based trading, because it's a huge psychological leap. It really is. It's a huge transition that has to be made. So what I'm saying is that not knowing that before I got to Chicago, it was like here I'm in a situation where I didn't know anybody who really knew how to trade, or at least knew how to trade in the sense of creating that consistency that we're looking for. It doesn't mean that people couldn't make money. People were making money all the time. It's just that, what's the point of making money if you're susceptible to giving it all back? In other words, if this is your equity curve, and then all of a sudden you're experiencing these huge losses and huge drawdowns, not only is this certainly damaging financially, but it's also damaging emotionally. And it can be very difficult to recover from. These are what I call the boom and busters. Okay, you basically had traders that fall into three categories as far as equity curve is concerned. You've got your consistent winners, the people who have the traders You've got your consistent winners. Now, it doesn't mean that there aren't drawdowns here, okay? But what do you think these drawdowns would be a reflection of for the consistent winners? Consistent winners take losing trades all the time. But their drawdowns are a reflection of what? Anybody got any ideas?
Good money management skills.
Yeah, money management skills. Capital preservation. Okay, these are two good answers, but not the answer I'm looking for. Their drawdowns are simply a reflection of the normal losses that any trading methodology will incur. There is such a thing as normal losses. You don't have to write this down because we're just starting to scratch the surface. We are going to go into this in far more detail later on. So, I mean, if you guys want to write it down, that's fine, but it really isn't necessary. Okay? Normal losses that any trading methodology will incur. Then you've got people who learn something about how to trade, who acquire a good methodology where it is possible, based on that methodology, to experience a consistent income, but your equity curve might look more like this. Most people who are experiencing the boom and bust cycles, these are the bust cycles, would say that something happened in the market to cause this. What you're going to find out today is that it is not the case. Even though it may seem like it, it is not the case. These are virtually always the result of trading errors, what I call trading errors, which we're going to go into in detail later on. One of the, just for the gentlemen, few people back here that don't have any idea of my background, I'm going to go a little bit further in it, and I'm just going to jump ahead for a second. I ended up being a trading coach, and working with. I was a trading coach for probably about 17 years. I don't really do it much anymore. I just pretty much focus on my own trading. But but while I was, especially in the, throughout the 80s and most of the 90s, I worked with a lot of floor traders. And we talk about boom and bust. There was one of the floor traders I worked with was probably one of the 5 biggest bond traders at the Chicago Board of Trade. And when I met him was in like around May of 1992. And from January of 92 until the time that I met him in May of 1992, he had around, this is a guy that just traded for himself. He didn't trade for a firm. He just traded his own account on the floor of the Chicago Board of Trade in the bond pit. He had $12 million roll in and out of his account. And he had a particularly bad day, and he ran into somebody who attended one of my workshops and said, hey, you should go see this guy. He called me. We had a few appointments, didn't really go anywhere. And the next thing, about a month later, I get a frantic call from his wife, who I hadn't even met, didn't even know who she was. Got a frantic call from his wife that said, they're going to lose their house if I don't do something with him, okay? he had another real bad day. So anyway, I started working with him in July of 1992. And from July of 1992 until the end of the year, he ended up the year with almost $6 million. Now, that may not seem like a lot considering he had these swings, but he'd never finished a year with more than, I think, around $650,000 or $700,000. So he had just under $6 million. And so then he went on vacation. He happened to take a book with him called The Coming Collapse of the Bond Market. And this would have been in like late December of 1992, early January of 93. And came back. Now, if anybody remembers the bond market back then, it rallied to spectacular heights. But in the meantime, he'd read this, The Coming Collapse of the Bond Market, so he was going into the market every day short, okay? And pissing away this $6 million until he got to the point where he had about 2 of it left. And took him about, I don't know, until maybe mid-February. And he was so exasperated that he said, hey, you know what? I'm willing to do anything. Okay, now keep in mind, I'm willing to do anything. And it wasn't lip service. It was real. It was genuine. It was sincere. And I said, if you're willing to do anything, then here's what you have to do. What I've been working with him, what I noticed is that he was able to stay focused really for not more than about an hour a day. Now, this guy loved trading. I mean, he just loved being in the pit. He just loved every part of it. He just had the hardest time tearing himself away. But if he really wanted to make consistent money, then I felt that an hour a day was about it. Because after an hour a day, his focus would start to diminish, and then he'd also start to get reckless. He was the kind of guy, and this here again, this is very difficult for people to comprehend, but it is the absolute truth. He was the kind of guy where, when I was working with him during that period, in the second half of 1992, where he would have he'd have a $500,000 day winnings. He'd make $500,000, but when he called after he was out of the pit to have his consultation, he'd be real angry with himself because up to 5 minutes before the close, he was up $500,000, and then he'd piss away about 175 of it. So it only ended up with $325,000 for the day. Now, this is just like a normal guy like us here in this room with $325,000. And this was not an abnormal day, but he's real angry with himself because he pissed away that 175. And then the next day, he'd do about the same thing. He'd make 400 and piss away maybe 2 at the close. And then the next day, he'd make, 350 and then piss away another 150. He's got spectacular wins up until Friday. But this accumulated anger that he was building up throughout the week, Monday, Tuesday, Wednesday, Thursday, by the time Friday rolled around, he'd lose $1.5 million. And then start the cycle all over again. So now it's like I'm saying, you know what? Especially as a floor trader, as a floor trader, you really have to be focused. When you're trading at the level that he traded at, where you're trading hundreds of sometimes thousands of contracts, if anybody knows anything about the bond market, we know that one incremental price change in a bond contract is $31.25, okay? You guys with me on this? So this would be a tick. So in other words, if the bonds went one tick up and you're long one contract, you'd make $31.25. If it went down one tick and you were long one contract, you just lost $31.25. He would trade 1,000 contracts at a time. That means one incremental tick price change was $31,000. $31,250. Now, if anybody's ever watched the bonds move, you know that it can move 5, 10, 15 ticks like that. Not only that, there can be what's called price vacuums. Everybody familiar with a price vacuum? You know what I mean by price vacuum? It means that if the bonds are at let's say 106.10, you guys are probably not familiar with bond prices. 106.10, that was the last posted price. That something can happen and you're long. Something can happen where there are no more offers and the next posted price is 106 even. That means the market went down 10 ticks without there being any trades between 10 and even. No trades at all. Which means if you're long, you just lost in that instant $31,000.25 on 1,000 contracts. This is quite common. So you really have to be focused. It would be like when you're trading at this level, I would make an analogy. It's almost like, there's a couple of analogies. One, it's like if you're in an NBA playoff, it's the finals, it's the last game, 7 games, it's 7-game NBA finals, 1 minute left, the score is tied. The coach is going to send somebody in who's really focused. If the coach thinks you're distracted and you're not on your game, you think you're going to get in that game? This is the way to be in these kind of circumstances in the pit. That's the kind of mindset that you had to maintain. Because even if you were distracted and turned away, there could be bids and offers that would have gotten you out of your trade that all of a sudden dry up. Meaning when guys are bidding and offering in the pit, they're using hand signals and they're telling you they want to buy or they want to sell and how many. And there's hundreds of guys all around screaming. Now these bids and offers can dry up because when you make eye contact and you point, you say, okay, we've got a trade, and then you write your trade down on your trading card, or now it's an electronic handheld device. But otherwise, you make a trade, and then you could be out of your trade and take your profits. When these kind of things happen, these price vacuums, you could be in bad shape, and just be a matter of just a momentary look away. The guy that you were going to use to get out of your trade is gone now. He put his hands down. Uh-oh, I'm in trouble. Well, what I found is that he could maintain an ideal mindset for about an hour a day. And so that's what I said. If you're really sincere, if you really want to do anything, you can only trade an hour a day. And he agreed to it. And he said, what hour a day? I said, it really won't matter. And it really didn't. He was convinced initially that what hour he went in would make a big difference. It really didn't make any difference at all. He was so good. As a matter of fact, there were other bond traders that I work with that said that watching him trade would have been the equivalent of like watching Michael Jordan play basketball. He was that good. And so he did. He went in just 1 hour a day. And because he knew that he only had that 1 hour, he was really focused, and he was averaging $175,000 for that one day, or for that on an average for that 1 hour per day. Okay, but that would be an example. He would be an example of an extreme boom and buster. Everybody kind of have that concept down in their brain about boom and busters, okay? And then what you have is the consistent losers. People whose equity curve looks like that. Now, just to get back to my situation, like I said, when I went to Chicago, I'm thinking, okay, I mean, I've got quite a bit of money. I sold my interest in the agency, but at the same time, I had a pretty expensive lifestyle, as you can quite imagine. I had a house in Michigan that I had a girlfriend, a very high maintenance girlfriend, and her two daughters were living in. And I had a very expensive apartment in Chicago and a Porsche, and I had the life, okay? And and I was going back and forth every weekend to visit them. So I mean, really, my situation was, I couldn't maintain that kind of lifestyle with the money that I had without being successful as a trader. And that was the whole idea anyway. I thought, okay, I'll make whatever shortfall that I end up with as a trader. And interestingly enough, I had to have my trading account with another brokerage firm secretly. I couldn't trade through Merrill Lynch. And there wasn't anybody else in the office who traded their own money. I was the only, unless they were doing it secretly and didn't tell me. I was the only person in the office who was actually trading their own money. Who actually traded, period, other than putting on trades for their customers. So what ended up happening is that, and another part of this is that I also had this, I can't really tell you why I knew this, it's just that I did. It just made sense to me. It just never occurred to me that trading was anything other than about psychology. I mean, the first trading book I ever bought was actually the very first book on trading, the first book that was devoted specifically to trading psychology, which was Jake Bernstein's Investor's Quotient, that came out in 1980. And there weren't that many trading books even available back then. And that was the first trading book that I didn't buy a book on technical analysis, I bought a book on trading psychology. So I was not only immersed in the concepts of trading psychology virtually right from the very beginning, I was also keeping very extensive journals of my thinking process, what was going on, what I was observing from other brokers in the Merrill Lynch office, as well as what I was observing from interacting with my customers. And I noticed we were all kind of conforming to the same patterns, the same problems. But just say that because I did have this kind of foundation, to understand that it was basically psychological in nature. Because one of the things we're going to talk about, when I get into the skills section of the presentation, is that when you look at trading skills, it's like, well, what kind of skills are we talking about? If we're talking about thinking like a professional, we're implying that the skills are all mental in nature, and they are. Because when you really get right down to it and you really start to think about it, what physical skills are necessary to trade? We're not talking about a golf swing or a tennis racket or any other kind of physical endeavor that we're familiar with. What kind of skills what does it take physically to put on a trade?
A mouse click.
A mouse click, that's it. Your ability to move the mouse and click it on the buy or sell button. It's that simple. And as a result of it being that simple, it's easy to think that, oh my God, trading is so easy. It isn't. As you well probably know, whether you've been at it a long time or even a little bit of time. There are some very sophisticated psychological skills that you have to acquire to get this kind of an equity curve. And virtually all these skills are founded in learning how to trade without fear. That's basically what this whole workshop's about, is learning how to trade without fear. Because that's what's going to screw you up on virtually everything. Everything that you can do wrong as a trader is going to be the result of what you're afraid of, and the effects that fear has on your perception of market information. So so with my situation, it's like here I'd given all this up to go to Chicago to learn how to trade, to find out that the only people who really knew how to trade back then were people that I didn't have access to. Meaning there were some big names in the industry who never really took the time or expended the effort to find out exactly what it is that allowed them to create a consistently rising equity curve. What they would say is, well, yeah, you got to go with the flow. The trend is your friend. Cut your losses, let your profits run. There's all these neat little phrases, but it's like, who in the hell knew what that meant and how to do it? Yeah, it sounds great. Cut your losses, let your profits run. Oh, even cutting your losses can be extremely difficult to learn. Letting your profits run can be 10 times more difficult than learning how to cut your losses. In fact, it's one of the most difficult things to acquire in terms of a skill is learning how to let your profits run. So it was like all this was kind of building up, and my lifestyle was draining my money away. And one of the things that I would say characterized me back then, if I was probably obsessive about anything, it was my credit. It's like my credit was as far as I was concerned, it was like the most important thing in life is to have flawless credit, not just, flawless. And here I'm in a situation where I am truly running out of money. And my trading losses, it wasn't really like I was losing a lot of money trading, because I'd really stopped the hemorrhaging. I wasn't trading in a way where I was actually losing money, but I wasn't making any money. And it's like there was always this little voice in the back of my brain, it would come to the forefront of my consciousness that would say, Mark, this ain't adding up. There's something wrong here. There's something wrong. It's like it's not adding up. And then I kind of shove it back there and, it's going to be all right. I'll figure it out. It's going to be all right. Eventually it got to the point where I was literally out of money. And the only choice I had was to file bankruptcy. Fortunately, I was in a situation where I had two residences, one in Chicago and one in Michigan. And so I had a choice of where I filed. And of course, I filed in Michigan, because if Merrill Lynch would have found out, they probably would have fired me. As a matter of fact, nobody knew what had happened. Nobody that I knew in Chicago knew what had happened. So I filed in Michigan, and I'm thinking, literally, because of my attitudes about credit, I'm thinking, if I've got to do this, I'm going to fall beneath the cracks of society and never reemerge. I really believe that. I honestly, God, really did. I just didn't see how it's possible to live after having to do something like that. And of course, what I found is that, and when I ended up, what I say in The Disciplined Trader, and I don't really go into a lot of detail in The Disciplined Trader about this, but just to say that what I ended up with was really, I had an apartment, I had my bed and my TV, and when I filed, I was still current on everything. I wasn't even late one day on any of my bills. As a matter of fact, I even called the finance company to come and pick the car up. But I wasn't even late a payment. I said, you know what, I can't do it anymore. You're probably going to want it back anyway. So, it was like, come and pick it up. And of course they did. And you guys, there's a funny story about that. I've never told anybody this, but you guys want to hear a funny story about that? When the guy came to pick it up. And so I'm thinking, because we're in front of the apartment building, and I'm thinking, well, if he's going to pick this up, then I ought to get some sort of receipt that it was in perfect condition, because I don't know what the hell he's going to do to it I don't know. So it's like, and the guy wouldn't give me a receipt saying that, and so I wouldn't give him the keys, and so so he called his boss, and I heard his boss on the other end of the line screaming at him, "You do whatever he wants to get those keys," just like, and he said something else I'm not going to say for this particular presentation, but yeah, it was like, they just someone's willing to give you the car, they don't even have to go repossess it. It's like, hey, give them the receipt. But in any case, what I realized, I mean, now you think about this, it's like when you define yourself based on your possessions. You know, just like anybody that loses anything, you've got an internal representation and you've got an external representation. And now there was a discrepancy between what was outside of me and what was inside of me in terms of the way that I define myself. And so that has to be reconciled. And what I realized, and it didn't even really take that long. I don't remember how long it took, but it was like, one, I still had my job at Merrill Lynch, and so as a result, I mean, it's like I'm starting thinking, okay, well, things are going to be all right. I was in my worst fear. I mean, that was my worst fear. I mean, when the fear would creep up into the forefront of my mind, I was like, that was my worst fear. Now I'm in it, and I'm realizing that, I think I'm going to be all right. I'm healthy. I can still think. I'm going to be all right. And when I came to this realization that I'm going to be all right, this is when things change for me as a trader. And this is the interesting part about my situation that most people don't have the benefit of experiencing. There are two things. One, I had this foundation of knowing that it was all psychological anyway. So I had all these things that I'd been working on up to that point. And two, when you tap out as a trader, I mean, when you really tap out, you don't get to trade anymore because you don't have any money, right? But I was in a situation where I still got to trade. Even though I was working with other people's money, I still got to trade every day. And so as a result of experiencing my worst fears, coming to the realization that I'm going to be all right, and then at the same time being in a position where I'm able to interact with the market, it was like, because I didn't have anything more to lose, I didn't. It was like this, the market completely changed for me. It was like I had these blinders on that all of a sudden just came off because the market was different, because I wasn't afraid anymore. I was seeing the same patterns over and over and over again beforehand, but I was seeing the same patterns differently. I was seeing the same patterns from a, let's say, relatively carefree state of mind. And that relatively carefree state of mind allowed me to, like say, flow in and out of my trades with an ease and effortlessness that I would not have been able to imagine beforehand. And then what happened is that I started making consistent money for my customers. And there's even, there's one really, as a matter of one really good story where, I mean, there are a lot of good stories that I can tell you about my customers at Merrill Lynch. But in one case, I inherited this guy who at the time was the head of the state of Illinois' mainframe computers, and he was from India. And he had put together his own trading program, and he was using the state computers to do it. And so, and he had an account, technically an account with Merrill Lynch, but it wasn't funded because he'd lost all his money. But he still maintained the account. And so I inherited him as a customer, and he would call me every day. And he was just like, and all he would say to me is like, I'd pick up the phone. He wouldn't say, hi, how are you? He'd say, give me data. Like give me the high, low, and close. And, so we interacted like this for a long time. Well, he came up with his own day trading system that eventually, well, because he and I started working on it together, he had the internal program for it, but he didn't have any money management parameters for it. So after about 2 or 3 months of working with him on it, we came up with some really good money management parameters. And then all my customers started trading it, and we were making consistent money day after day, even to the point where Merrill Lynch was starting to take notice. Here all this whole his customer base is making money, and he got to the point where he's thinking, okay, all these people are now deriving this benefit from my work. I should be able to do it too. And he talked his wife into letting him put $5,000 into his account to fund his account. Now, I didn't know what happened to him. Why? I mean, it's not like we had personal discussions, so I don't know why he didn't have any money in his account. The guy was a maniac. It's like he put the money in his account, and 2 days later it was all gone. It was like he'd call me up and say, okay, do this. I said, well, wait a second. The system says to do this. He said, no. I don't care what the system says. This is what's going to happen. He didn't follow any of his own rules. Now here we had a track record We had a legitimate track record, bona fide, real money, day after day. He gets a few bucks in his account, and it's like he thinks he knows where the market's going. Like I said, he was gone in 2 days, and that was it. It was all over with, because at that point, he was done. I didn't get the system because it was in his computer, mainframe computer at the state of Illinois, and had no more contact with him. And shortly after that, ended up getting fired from Merrill Lynch anyway, because there was like one of these management consultants that came in from New York, and she was going around the office talking to all the different brokers because of whatever it was that they were trying to find out. And she got to me, and by that time I was already writing The Disciplined Trader. And I just I started very exciting to say, oh yeah, this is what I found out, and this is what I've learned. And her eyes lit up saying, this is exactly what we're looking for. And she was we talked for probably about an hour and a half, and she was all excited. And then she said, I got to go tell, well, I'm not going to say his name, the office manager, okay? And she walked away from me, walked over to the office manager. 10 minutes later, he came over and said, pack up your stuff and get out. Right then and there on the spot. Pack up your stuff and get out. So that's how I ended up actually being a trading coach, because by then, floor trade, because I'd made friends with floor traders. I was making friends to find out how they trade and that sort of thing. Well, they started coming to me for advice, even while I was at Merrill Lynch. And because it's a pretty small community, the word gets around, especially when people are really genuinely helped with the kind of advice that you're giving them. And I'd helped several floor traders turn their trading around. And so what had happened is I started getting hired by clearing firms. What I mean by clearing firms is that to trade on the floor of an exchange, you have to clear your trades through a financial institution. And so, it's like these are traders just like you. They have their own account, but what they have to do is they have to clear their trades through, like I said, one of the major clearing firms at the exchange. Well, what would happen is this, that it isn't like this now, but back in the early 80s, or the mid 80s, clearing firms were in some ways like almost like family operations, where the people who owned the clearing firms, they knew all the floor traders, they were friends with them, they partied together, Christmases and holidays and that sort of thing. And so if one of the floor traders would go debit, you know what I mean by go debit? In other words, you have to have a positive balance in your account. Well, the problem with floor trading is that not today, but back then, when you traded on the floor, you had to record your trades on a trading card. So in other words, if you and I are entering into a trade where I'm going long and you're going short, what I would do is that we would take our badge, like the acronym of our badge, and our clearinghouse number, record it on this card, and how many contracts we traded. Let's say you're short 10 and I'm long 10, and the price that we traded them at. Well, those cards didn't have to be turned in until the end of the day. And then they'd all get reconciled, meaning that between all the different trades and all the traders from all the different clearing firms, this would all go into a central clearing operation to find out which trades were, to find out who's long and who's short, how much money's coming out of whose account, and whether or not they were what are called out trades, meaning that you thought I said 10, and I thought we were doing it for 100. Okay, so now we've got a discrepancy of 90 trades. These were called out trades that had to be reconciled before the open of the next day, which is a whole nother world. We're not going to get into it. All I'm saying is that it would not be unusual for guys to overtrade during the day, and the clearing firm wouldn't even find out about it until the end of the day. For an example, one of the guys I worked with at Merrill Lynch, eventually he was a mathematics professor. He's a really nice guy. Should not have been a trader at all. Had absolutely, anyway, with Pease at the Chicago Mercantile Exchange, and he was a one-lot trader, meaning, just traded one contract, one in and out, one contract, and eventually the forces inside of him were building up where he's frustrated with the fact that he can't make a living at it, he's just eking it out, where one day he snapped, and this one-lot trader almost took down the clearing firm. In other words, he's got like several thousand S&Ps on, several thousand contracts where other guys are into those trades and the market's going against them. So he almost took down a clearing firm just by himself. So what would happen is that because guys would go debit, meaning they end up in the day lost, maybe they're down $25,000 or $50,000 or $100,000. The guy that owns the clearing firm doesn't want to say, hey, you can't trade until you pay this off. They'd want to let him to go back into the pit to work it down. Well, after, you got 4 or 5 of these troublesome or 15 of these troublesome traders that are constantly running debits, you start to get a little worried. And so what they did is they hired me to work with these guys. Most of the information, most of the insight, let's say, that you'll find in the disciplined trader and trading in the zone came from me working with these floor traders on a daily basis. And I'm laughing because obviously it was quite a trip working with these guys, because they are not like you and me. That's really about the best way I can describe it without going into a lot of detail. They're not like you and me. So anyway, this is kind of maybe a long drawn out introduction to the fact that what we're talking about here is that you guys have a really wonderful trading methodology where there is an enormous amount of potential for you to be able to make a consistent income from being able to take full advantage of the potential that this trading methodology offers you. But I would say that there's probably, it wouldn't be unfair for me to say that there's probably what I'm going to call the profit gap. The gap between the potential and your bottom line results. This is the potential, and this is your bottom line results. Most people think that when they realize that this gap exists, that somehow learning more about the markets is what's going to fill it. And what you're here today to learn is that that is categorically not the case. You have to learn more about yourself and how you interact with your trading platform and the market to be able to fill this gap. There are psychological skills involved. And then when I talk about psychological skills, do anybody think of an example of a psychological skill? This is difficult. I don't think, I'm not saying that you should have the answer, but can you think of an analogy in maybe in other parts of the way we express ourselves that you can think of? What would be an example of a psychological skill?
Anger management.
Anger management? Okay, good. Anybody else? Okay. What about a situation, and anybody watch Wimbledon here lately? Just it was on? I'm not a big tennis fan, but I just happened to be watching it. And because I knew that I was doing this workshop here, this is something that really sticks in my mind. What's the difference between let's say, here, this is even a better example. What's the difference between a pro basketball player who can stand at the free throw line and hit 20 in a row, even 30 in a row, where the thing about the variables are fixed. The line and the basket and the distances, they're all fixed. And they've got the motor skills to be able to hit, like I said, 10, 15, 20 in a row, but they get into a situation where there's 1 second left and the score is tied and this basket is going to win the game, and he chokes. That's a cycle. The guy that doesn't choke has a psychological skill that the other one doesn't. Trading without fear is a psychological skill. It is a skill that the professionals have acquired, and they have evolved beyond the typical mindset or the kind of mindset that the typical trader operates out of. So when we're talking about trading or thinking like a pro, that's exactly what I'm saying. I'm saying that you will evolve beyond the typical mindset so that you can take full advantage Full advantage. If this line represents potential, that you can take the potential of your methodology, so that you can take full advantage of your methodology. Because it has to do with your state of mind. I talked about objectivity, I think, a little this morning or last night, I'm not really sure. I'm on page 7. Is it possible to be truly objective? From a larger perspective, or from the largest perspective, we could say that we could share a reality. In other words, where you and I would be perceiving exactly the same things, the same information, and the same possibilities inherent within that information, if we had simultaneous awareness of everything going on at once. So in other words, if I could represent all possibilities as a finite line, and I can't, but you know, because it's infinite, but let's say I could represent all possibilities that exist in this line that has finite boundaries between here and here. The only possible way that we could share an objective reality is if all of us had the capability of perceiving every possibility and every distinction in any given moment, because we'd be experiencing exactly the same thing. Are you with me on this? We'd be experiencing exactly the same thing because all the information that was available, we would be perceiving in the same way. We'd be perceiving all of it. Remember, beliefs limit what we perceive. Beliefs limit what we perceive. So if you and I are operating out of different beliefs, which we are, it means that although we assume that everyone's sharing our reality in any given moment, because each of us think that our reality is self-evident. Now think about this. In any given moment, each of us think that our reality is self-evident and everyone else has to be sharing it, right? Why wouldn't we? Which of course is not the case. And the only way that it could be is if, again, we could have the capability of having simultaneous awareness of everything going on at once. If we have not evolved to that state of that place where we can have simultaneous awareness of everything going on at once, it means that we are perceiving something less than what's being made available. What we perceive in relationship to what's available is based on what we've learned to believe. If you and I have learned to believe different things, then we can assume that in any given moment, we are not going to be perceiving reality in the same way. It's that simple. And so, from a macro perspective, we really can't be objective. However, from the individual's perspective, the micro perspective, we are the micro or the macro, okay? From the individual's perspective, whatever it is that we have learned to perceive out of what's available, we can be objective in the sense that, are we in a state of mind where we have access to everything we've learned? Is there anything about what's going on in this moment that's being blocked by some mechanism inside of our mental environment? If there isn't, then we are being objective. To the capability or to the extent that we're capable of. We are being objective to the extent that we are capable of. To any degree that we are experiencing fear, it starts shutting down this perceptual process. The greater the degree of fear, the less possibilities we perceive. Until we get to the point where if we're in a state of complete terror, we may not see any other possibilities at all except what's going on in that moment. In a moment where, if you're in a state of terror, in a moment that seems to never end. It could be 5 seconds and it could seem like 5 days. Euphoria is exactly the opposite. It's like there's no capability to perceive any limitations. You've lost your capability to perceive any other possibilities other than, in a sense, it's not really, I don't know if it's really shut down. In a way, I guess even euphoria is kind of shut down your perceptual process in a way. I haven't really thought of it that way, but I think, huh. Yeah, in a positive sense, yeah, really, in a positive sense, you're in a state of mind that where you would be wouldn't be capable of perceiving really anything other than what you want. Success.
You don't see failure.
You're capable of perceiving any other possibility other than getting your expectations fulfilled.
Sounds like overtrading to me.
Oh yeah, it's a prescription for it. What? Yeah, you can't perceive the risk, right? Yeah, there is no risk. In a state of euphoria, there's virtually no risk.
No stops.
No stops, no nothing.
Yikes.
So does everybody understand the nature of objectivity and what's going on? Basically what you want to do, an objective state of mind for each of us as individuals is just making sure that we have access to everything we've learned. And our perceptual process isn't being shut down by some internal mechanism like fear. Or the potential to define and interpret information in a threatening way. So can we control our state of mind to experience greater levels of happiness and satisfaction in our lives? Yes, but to do so, we have to be willing to question and change our definitions to incorporate other possibilities that exist from the environment's perspective. In other words, we have to be willing to de-energize something that we've already learned. I've talked very little about this process of questioning, but it's something we're going to get into when we get into all the various techniques on how to one, identify beliefs and how to change them. A lot of it has to do really with just your willingness to question things. And what I mean by question things is most of the times people ask questions basically just wanting verification of what they already think is right and true. I mean asking a question from a sincere space of wanting an answer. Because you have to assume that if you knew the answer, you wouldn't ask the question in the first place. So to ask a sincere question, now think about this, to ask a sincere question, you have to be operating out of the assumption that you really don't know. That's a really important distinction. Because what I'm saying is that when you ask a sincere question, it creates a vacuum in your mind that will be filled with information. It opens up the creative process. Asking a sincere question opens up the creative process. And you start getting access to what people might normally define as even inspirational information. Inspirational in a sense that is not coming from a rational thought process. It's coming from out there in the universe somewhere. It's hard to know where it's coming from. The best examples that I can give you of that is that The Disciplined Trader and Trading in the Zone were both written that way. You'll notice there aren't any footnotes in either of those books. And the reason why is because I did not refer to other people's work. I specifically stayed away from other people's work. Those books, both of them were written by simply asking questions. And the answer just got dumped into my brain. No different than someone writing a song, doing works of art. But the questions I asked were genuinely sincere questions. I really didn't have the answers. I really wanted to know. I had pieces. I had enough pieces to ask a question. And then I would just be in a situation where I was either doing some consulting or coaching work with somebody, and all of a sudden I would hear myself saying, the answer to the question I asked maybe the day before or a few hours before. It's like I'm saying, oh my God, this is it. This is the answer. I've never said this before. I've never thought it before. And one of the things I did was I diligently, I had this rule where I diligently wrote down, anytime this happened, I always stopped and wrote it down, no matter where I was at. I don't care, the guy was paying me $200 or $300 an hour. I actually stopped the process, I wrote it all down, and then continued with the appointment. That always came first. I didn't charge him for the time I was writing, but the point is, it took longer. He had to stay. It might have taken me a half an hour to write all this stuff out. You will find if you get into this kind of process, you will find you can do the same thing with the market. You can simply ask where the next best edge is going to be. And find that the next thing on the chart that your awareness is drawn to, just, and see what happens.
Back over just a second here.
Oh, I heard something good there, eh, Dave? No, I'm sorry.
When you're saying we're willing to question in order to change the state of mind, are you saying we're questioning the beliefs that are altering our state of mind? Is that what we're getting at here?
Well, no, what you're doing is just, it could be that. It could be any number of things. What you're doing is just, you're asking a question. You're asking a question because you want information. Now, a lot of it has to do with, just like you can say, asking a question for information that might be subconscious, or questioning a particular way that, particular belief that you might have, so that you can, like I said, you can experience. If you've noticed that there are reoccurring dissatisfying experiences in your life, that's the thing that I'm talking about. You can assume that that isn't the only possibility that exists under those circumstances. Make that assumption. And then as a result of making that assumption, start asking sincere questions so that you can dismantle the closed loop.
That's okay.
Okay. Okay, I thought you were referring to the trading things. That's why I kind of
No.
responded the way I did. Okay. About asking where the next best edge is.
No. I'll ask you later.
Okay. I do that all the time, by the way. I really do.
That's great.
Yeah, really. It's pretty cool the way it works.
It works for a lot of things. I've done it.
Yeah.
I've really done it from a belief standpoint, but in terms of like business and stuff, it's like, how can we grow this segment to the next level?
Sure.
If you ask yourself that enough times, eventually you get an answer.
That's right. You really will. And where does the answer come from?
It pops out of your head.
That's right. Yeah, I don't know. It's like, where does it come from? It's just, it's just like it comes from wherever.
Your mind starts working on it because
Yeah.
You told it.
you put it to work.
Yeah, we
It's
do
supposed to
have
not
the
be-
capability of garnering information and insight from out there somewhere that isn't inside our memory banks, okay? Not organized at the rational level of thinking.
Inspiration.
Yeah, exactly. But like I said, you have to ask a question from a sincere space.
Power of questions.
Yeah, the power of questions. It is really powerful.
They have to be worded properly. You can't rely on failure.
Yeah, well, the wording has a lot to do with it. What he's saying here is that because I don't know if they picked it up on the mic, but he's saying, like, why am I a failure? You can ask a question like, why am I a failure? You really can. That's not a bad question to ask. However, but what you did say about properly wording the question, the wording has really everything to do with it. It really does. How you word your questions is virtually, well, I'd say, it's really important, I guess, because the answers you're going to get are going to be within the context of how you worded it. You're going to get something that pertains to the wording as opposed to maybe something else that you might have wanted, but you didn't word it properly, based on what you wanted. Go ahead, Greg.
It's kind of like if you want a better answer, ask a better question.
That's right. You're very good. That's okay. If that didn't get on the tape, Greg said, if you want a better answer, ask a better question, because you will get an answer that corresponds with the question you asked. What time is it? 2:45? Okay, as soon as we get done with this, we're going to listen to the tape. We're going to take a short break and listen to the tape. How are we doing this? We'll start from. I'm on section 4, page 9, and Roman, why don't you start with the first point and read that? We're going to go this way, like this. Just go ahead and read it.
Everything we have learned throughout our lives is structured energy.
Go ahead.
This structured energy will operate inside of our mental environment as a source of power, causing us to perceive and respond to the outside environment in a way that is consistent with this energy.
The environment can express itself in an infinite combination of ways. What each of us perceive and experience is very small in relationship with what is available in any given moment. In other words, instead of assuming that we already know, we can assume that we haven't learned to make every possible distinction that exists in each situation of our lives. Inherent within the distinctions we haven't learned to make yet is an opportunity to experience satisfaction.
Go ahead, John.
Fear causes us to narrow our focus of attention on the object of our fear, drastically reducing our perception of what is available or possible from the environment's perspective.
Many dysfunctional beliefs and fears operate at an unconscious level, blocking us into cycles of dissatisfaction, frustration, and pain.
Learning something new is often blocked by the way the energy is already structured inside of us. In other words, once we learn a belief, it will forever shape our lives unless we unlearn it.
Or I should say, to draw the energy out of it.
Every advancement in human civilization, whether it be cultural, scientific, or otherwise, came from someone who challenged the status quo by questioning what he had learned. The act of questioning opens us up to perceive the existence of other possibilities. If we assume that happiness and satisfaction exist as a possibility, then it is up to each individual to find that happiness and satisfaction by discovering these possibilities. To discover anything new, you will have to be willing to question and look beyond what you've already learned to believe about what is true or available.
Now, the way that I like to illustrate that last point about the nature of questions is that if this circle, well, let's just say this circle, again, a very erroneous thing to do, but this circle represents the universe, meaning what's available to be learned in the way of distinctions about the inherent properties and characteristics of the whole universe, right? Okay? And you can say that, let's say 100 years ago, that the sum total of humanity, both alive at that time and recorded in some way up to that time, that was still in existence, might have made, in terms of knowledge or distinctions, this much in relationship to everything else that exists. And what's happened in the last 100 years is, let's say we've expanded that circle, let's say by something like that. How does the circle get expanded?
Questions.
Yeah. In other words, someone's willing to operate on the fringe. There's always somebody that's willing to operate out there on the fringe of what's possible. Go out, discover something, bring it back to the rest of us for us to say what?
Yes, sir.
Are you crazy?
Yeah, you're crazy. Not yes. Virtually always you're crazy. No, that's not possible. No, that's not real. No, that doesn't exist. And why? Because it's just the inherent way beliefs operate, right? It's conflicting information, contradicts what we already believe to be true. Not true. But it might intrigue someone enough, another person, to go out there and come back and say, hey, this guy's right. And then somebody else does, and somebody else does, and next thing you know, the circle gets expanded a little bit. All of us are in this circle. if you take the sum total of everything that's in everyone's mind alive today, everything that's in the mind of everyone alive today, plus what's been recorded from human history that exists, that by this circle, then each of us are a part of that make up the whole. Are some percentage of that circle. So how do we expand our own circle? The same way. Go challenging what we believe to be true and questioning things and see what happens. Yeah, challenge the status quo. It does seem as if that's what we're supposed to do. We are evolving into something. There isn't any question about the fact that humanity is evolving. If that weren't the case, then we would still be living like most of the people probably in Afghanistan. The sum total of humanity is evolving. There are definitely cultures that are not in the same, we're all not in the same spot, but we are definitely going somewhere. And it does seem as if there is a desire on the part of the universe as a whole to expand. Scientists already know that it's expanding. Now, if it's expanding at the macro level, wouldn't it make sense that because we exist at the micro level of an expanding universe, that if the universe as a whole is expanding, that if we're going to live within this universe in a way where we can create, let's say, happiness and satisfaction for ourselves, in other words, create a really satisfying life, wouldn't it make sense that we have to be in harmony with that expansion? Yeah, that the less that the more that we resist evolving, the more it seems that the universe kind of conspires against us, it's in conflict with us. And that would make sense because everything is in motion. Everything is constantly changing. Nothing is staying the same. No two moments could ever duplicate themselves, ever. And the only way that could happen is if every atom of every molecule was in the exact same spot it was at some previous moment. Now, from a practical perspective, I don't think that's possible. But the interesting part is every belief we've ever acquired can remain static exactly the way it was originally formulated for our whole lives. So we've got beliefs that remain static and a universe that's constantly expanding and changing. Beliefs that cause us to see the now moment as it exists in our lives instead of the way it really exists from the environment's perspective. And if we aren't willing to adapt our beliefs to correspond with this constant expansion, it will seem as if the environment is conspiring against us. And it will create stress. It will create anxiety. Because the stress and the anxiety is our own resistance to change. So let's take about a 15-minute break and we'll listen to the tape. From the Monroe Institute in Virginia, and they've been doing work in the area of how high-frequency sounds affect states of consciousness for probably over 40 years. They've got a real distinguished staff of doctors and PhDs, mostly from like Harvard and Yale and all your Eastern Ivy League colleges. And I started using their tapes many years ago, not only for myself, but to use in my workshops because I wanted a technique that I could give people that they could use to help them neutralize their fears. There's, specifically those 4 trading fears on being wrong, losing money, missing out, and leaving money on the table. That was effective. What's that, Jake? What? I don't know. It's not on any page. That was effective, but at the same time met certain criteria, and the criteria was this. Instead of using hypnosis tapes or like specifically subliminal hypnosis tapes, one of the things that I found is that subliminal hypnosis tapes can be very effective, or even hypnosis tapes for that matter, can be very effective if what you're trying to do, in other words, whatever message that's on the tape, if the message itself is not in conflict with anything else that's in your mind, then the tapes can be quite effective. And so when you hear people talk about the power of self-hypnosis or hypnosis and how well it worked for them, chances are it was a circumstance in which whatever message they wanted to embed in their mind was not in conflict with anything else that was already in their mind. And so what you'd get is a glowing testimony or testimonial. However, when the message on a hypnosis tape is in conflict with something else that's in your mind, then what you're doing is setting up an inherent conflict, because what the tapes generally don't do, or don't, I've never seen them do, is help you neutralize whatever conflicting beliefs that you might have with the new message or the new way in which you want to express yourself. So in other words, this process of change is always a two-pronged process in many cases. One, de-energizing the beliefs that let's say you've determined are dysfunctional or are not useful any longer, and at the same time energizing and installing a new belief that compels you to express yourself in a way that's consistent with your desires or goals. So you've got to do both. So the reason why I picked these tapes is because instead of being passive, meaning that instead of you just listening to a tape, this particular technique requires you to be active. Meaning that what this tape does is it uses high frequency sounds to install what would, I guess, be commonly referred to as like an anchor inside your mind. An anchor would be considered a tool. And as a tool, like any tool, a tool that might be in your toolbox is completely useless until you pick it up and use it. In other words, it has no use until, or function until you actually pick it up and use it. And it's the same way with the tool that's going to be installed in your mind from this tape. It has to be used, or otherwise it does nothing. So basically what's going to happen is this. I picked a tape, and there are a whole range of tapes that you can get from the Neuro Institute that have different purposes on this, in this HemiSync, in the HemiSync category. There are a number of different programs they have and a number of different types of tapes. But if you've looked at the catalog itself, has everybody looked at it? Just take a moment to look at the catalog and see the different uses they've designed these tapes for. The one that I picked was the, boy, that's where my brain is. What's that? The, what tape did I pick? What? No, that's the name, yeah, DHAB, yeah, I'm sorry, okay. DHAB. You'll notice, what does it say about the DHAB tape? To neutralize habitual behaviors? Go ahead.
Eliminate or diminish undesirable mental, emotional, or physical habits. Use anytime you're about to follow a behavior pattern you wish to change. Break free of anger or old emotional patterns. Eliminate thoughts of failure or move beyond a cycle of negativity.
Okay.
See John Daggett.
So what I've done is basically adapt this technology specifically for the purpose of helping people who come to this workshop neutralize their fear of being wrong, missing out, leaving money on the table, and being wrong. And we'll get into the actual techniques later on. In other words, the techniques of using, how we're going to use the tape, we're going to get into. Maybe not today, if not this afternoon, by the time you're done, tomorrow morning. However, the reason why we're listening to it today is because it requires 3 listenings, meaning that we're going to listen to it once right now. You're going to listen to the prep side of the tape. The prep side of the tape is just getting your mind prepared to get this function command installed when you listen to the other side of the tape, the DHAB side of the tape. You've got to listen to the prep side of the tape twice. We're going to listen to it now. I'm going to ask you to rewind it and listen to it again tonight. And then tomorrow we'll listen to the DHAB side. Now, all this tape is basically high frequency sounds, and you'll hear, I don't know if it's Bob Monroe any longer or a guy by the name of Mark, I don't remember his last name. But anyway, Bob Monroe's now dead, but he used to be the voice on the tape, and you won't hear him very much anyway. But there's a couple of things. One, the tapes are are incredibly relaxing. I haven't had anybody yet that's come to one of these workshops that really hasn't enjoyed the experience of listening to the tape. Now, you can listen to this tape as much as you want. You can't listen to it while you're driving or anything else like that, because you'll probably end up falling asleep. You don't have to fall asleep. When Bob Monroe or whoever's talking on this particular version of the tape says, you know, for your hands and arms and legs to go to sleep, he's not telling you to go to sleep. He's telling those particular parts of your body to go to sleep. If you end up falling asleep, that's all right. It's no big deal. He'll wake you up at the end of the tape. And again, you can listen to this tape as much as you want. If you like it and you want to use it as a relaxation tape, listen to it all you want. This tape will do nothing to get rid of your fears by itself. Listening to the tape has no effect on your fears. Only consciously using the function command when it gets installed in your mind on the other side of the tape, when you consciously take the steps of using the function command, will it have any impact on your fears. Are you guys with me on this? I know maybe it can sound confusing. Sean?
On the second side.
The tool's on the second side. Well, okay. What I'm saying is that listening to the tape in and of itself doesn't have any effect on whatever fears you might be wanting to neutralize. Although you can listen to the tape as much as you want. Bob Monroe doesn't know what your fears are. Bob Monroe, when they designed the tape, does not know what habitual behavior you want to neutralize. That's up to you to decide what habitual behavior you want to utilize by taking the tool out of the toolbox and using it in the appropriate moment, meaning that it requires a conscious decision on your part. That's why I picked this technology. It's not passive, it's active. You don't take a part in it, nothing happens. Are you guys with me on this? John, are you with me? All right. Okay, now, so put the tape in the machine. The prep side of the tape. Turn Dolby off if you've got it. If you've got an expensive machine and have Dolby sound reduction, turn Dolby off. When everyone gets their headphones on, I'm going to tell you when to turn it on, and everyone turn it on at the same time, so we're finishing at the same time. It'll last approximately 28 or 29 minutes. Sit back in your chair and relax, and enjoy the experience. Don't turn it on yet. Wait till everyone's ready. And we might want to, I don't know if we want to turn those lights down, or can we do that?
Anybody bring any incense?
Yeah.
Sage.
Is everyone ready? Everyone ready to start? Yes? Okay, turn it on. Let's go. Where it weren't. Anybody sleeping? Where? Who fell asleep? What? What?
Heard some snoring.
Yeah, did you? Anybody got any feedback on the tapes? Was it generally a pleasant experience for everyone? Yeah. Your hand is numb? Yeah, these are really nice tapes in terms of, I mean, not only are they effective if you use them for the purpose for which they were intended, but you can also use them as just a general relaxation tape. As a matter of fact, how are you guys doing anyway? Does everyone want to go for another, let's say, half an hour, 45 minutes, or? Okay, good. Okay.
Oh, he said we're wide awake now.
Yeah, right.
This is
Yeah,
solutions
great.
now, we're ready.
Okay, good.
Ten.
What's that? What was that, John? I didn't hear that.
Ten.
Oh, that's the wake up.
Every time you say 11, we have to send more money in there.
Okay, I'm in section 5, but I'm going to go right to page. I'm going to go right to page 4. No, right to page 3.
Page 3 at the beginning of the book.
No, page 3 in section 5. Right at the bottom of the page where it says using the Monroe tapes to neutralize your trading fears. Since we've just done this, you just listen to the tape. I'll go right into how this works. The way you're going to do this is when you, well, you see, you haven't got the function command yet. Maybe we ought to do this tomorrow. No, I take that back. We'll do it tomorrow. I'm sorry. problem is I don't feel like getting into this right now. Hold on. What? No, hold on. That's all right. Hold on. Let me.
I'll make some comments about this self-hypnosis statements.
Yeah, go ahead.
I've done a lot of work in that area.
You have?
Yeah.
Okay, cool. Go ahead.
Take
you to notice that you weren't following your normal routine. How many days, weeks, or months?
I don't know. It's been a year. It's been a process. You know, where it's been a challenge to make any money. It's not the market. It's in me.
Okay, so what we're going to learn, there's a particular, just a real simple meditation technique that we're going to do tomorrow. That will, if you practice this around 10 or 15 minutes a day, what it'll do is it'll help you become an objective observer to your own stream of thoughts, so that you can start to notice when you're not doing, or when you're not thinking, or when you're thinking, saying, or doing something that's inconsistent with your goal, so that you're not unconscious of this moment-to-moment endeavor for of how we're creating our lives and the choices that we're making. Because if you want to be a consistently successful trader, then what you want to do is collapse the amount of time that it takes for you to notice that you're not doing something that's consistent with your objective of becoming consistent. And hopefully, by doing this kind of exercise we're going to do tomorrow, what it'll do is it'll collapse the amount of time that it takes for you to notice that to virtually instantaneous. That you're aware that let's say your distracting thought, because anything that you do that deviates from what your objective is a distraction, right? Well, doing is the last step. The first step is always a thought. You're going to think about it before you do it. You might even run something through your mind. You might even talk about it with somebody. But it's first going to be triggered by a distracting thought. Now, if you really want to become consistent, what you want to do is be able to catch yourself in the thought. Catch yourself at the point where the thought and the awareness of the distracting thought are virtually simultaneous. Instead of it taking, 5 minutes or 10 minutes, or looking back days, weeks, or months later, saying, hey, you know what? I'm not doing what I know works. That's basically even what you were saying. You're not doing what you know works.
Yeah. And I'd add one other thing, because you mentioned it yesterday, and I don't remember in what context. I used to keep track of every day before I started trading. I'd write down a number from 1 to 10 or 1 to 100. And it was rate yourself on how you feel that day.
Right.
And if you feel like you're an 8 or a 9 or an 85 or a 95, and if a trade comes along, have the courage when you're at the higher end of the scale to put it on and go for it. Don't hesitate as much. And if you feel like maybe you're a 3 or a 4, put the trade on, but don't go balls out on it.
Or scale back.
Yeah, or scale
in other
back.
words, it's a rating system to use you can use in conjunction with money management. So that if you, let's say, you normally might trade 3,000 shares, if you rate yourself a 10, then you're going to trade 3,000 or maybe even a little bit more if you get a real primo signal.
Yeah.
But if you're rating yourself as a 5 that day, then you know what? You want to scale back proportionally. You might only trade 1,500. You might only trade 1,000.
Yeah.
Because what it really gets down to is like at least what I had before, is that if you're not in the most ideal, if this is positive and this is negative, okay, and you're not in this most ideal state of mind to be trading, because that's what it really boils down to, and that's really essentially what you were talking about. He was rating, he learned, or at least he involved himself in a system where he was basically gauging or rating his state of mind. In essence, his capacity to make money, or his capacity to make money in the sense of how clearly am I going to be able to perceive the market and how well am I going to execute my trades. And in advance, he's saying, you know what, I'm a 6 today. And you can learn to do this, and you can learn to be honest with yourself about it. And as a result, have your money management, of course, in other words, the amount of size that you put on, correspond with how you're rating yourself.
In that scenario, would you also take a moment, say 45 minutes or an hour into the market to rate what the market's doing to make sure that you're in conjunction?
Oh, you could, sure. Yeah, you could let the market define itself. And not trade the open, you know.
Well,
Let it
if
go.
you're,
you know.
if you're a 9 and the market's a 2.
And the market's a what?
2.
Oh, I don't know what you mean then. I misunderstood. You mean in terms of symmetry? In other words, if you're going to rate the market in terms of symmetry? Is that what you're saying?
If you're trying to determine what your strength is as of that morning,
Uh-huh.
either mental clarity, physical clarity, whatever it is, on a
Right.
scale of 1 to 10,
Right.
wouldn't it also make sense at some point after you've seen the way, not trading the open or not trading, just somewhere in that first hour, determine what your opinion of the market is that day on a scale of 1 to 10 to make sure they're in sync? Because if you're trading at a 9 but the market's reacting at a 2,
Not really. I don't really. Yeah.
How are you trading the market?
Sometimes you're more, maybe you can put into perspective. Sometimes I have a very strong, I feel that I know what the market is doing good. I feel
Yes,
confident about that. Maybe that's
Is that what you're
going to
saying?
the rating.
Is that you felt confident about how the market's unfolding, and yet the market isn't unfolding that way? Is that what you're saying, or? Because look at it this way, John. Even if whatever assessment that you might have of the market's going to unfold, okay, whatever assessment you might have about that or what the potential is, even if the market isn't doing what you thought, isn't that significant? So when you look at it that way, it's like.
and you'd see it sooner if you were trading at an 8 or 9 as compared to if you were.
Exactly, okay?
It's all
So,
rolled into it.
yeah, so it's like you could say, hey, what's significant? Is the market following, the projected symmetry? And if it is, that's great. But if it isn't, that's telling you something too, isn't it?
Right.
And you're also going to get signals. You can also get a lot of signals out of that. You get sometimes more signals about what it's not doing in relationship to these significant reference points of symmetry as opposed to what it is doing.
Before we agree that we don't know what the market's going to do anyway.
What's that? We don't have to know. Well, but we're kind of mixing. We're kind of mixing it. We might, mixing a little bit in the sense that it depends on the context in which we're trading. If we're trading mechanically, all this kind of discussion would be irrelevant. If we're trading subjectively, it's not. It's just like, for an example, if you're trading mechanically, you're going to have a predefined, a definite predefined entry point where the variables are specific. There's no subjectivity whatsoever in terms of, the conditions under which you enter the market. Those variables are either present or they're not. It's black or white. They are present or they are not present. If they are present, you're obligated and committed to enter into a trade. If they aren't present, then you do nothing. But when you evolve into the subjective stage of trading, then you can use anything you've ever learned about the nature of the market to generate a signal to get in or out. So for an example, what we're talking about, Roman, is that in the mechanical stage of trading, let's say for an example, the market's doing this and you've got a stop down here. You entered the market long right here at this point, okay? At this point right here, and your stop is down here. If you're trading mechanically, you can't do anything with that stop, meaning that the market, your market either goes in your favor, stops you out, and that's all there is to it. Either or. If you're trading subjectively, if the market, let's make it a little bit easier to illustrate if I made more distance, but if you're trading subjectively, if the market's trading around in this area and as a result of the kind of patterns that it might be producing, you could say, you know what, I don't need to keep that stop in the market. I'm going to pull it and either move it up, move it further down based on your assessment of what's happening now. See, in the subjective stage of trading, you do that. You can even get out before you get stopped out, even if it wouldn't have stopped you out otherwise. In a subjective stage of trading, if you make that assessment of what the market's telling you in that moment, that's all right. Did you see the difference?
I can see the difference, but
In the subjective stage of trading, you can do anything you want under any conditions that you want. If you put a stop in the market, you want to take the stop out, then take it out. You want to move it, then move it. In the mechanical stage of trading, there's no discretion whatsoever. What's that?
Are you then changing the rules?
Yeah, you can't.
Going from mechanical to subjective, et
Yeah,
cetera?
in other words, you're either one stage or the other. If you're trading a mechanical stage, you can't change your rules in the middle of a sample size. You can only change your rules after the end of a sample size. So whatever you determine your sample size of trades to be, it's going to be like 20 trades or 25 trades. You are committed to take all 20 trades. You can't change anything in the middle or until you're done. But when you've moved into the subjective stage of trading, I'm assuming that you won't do so until you have worked through whatever resistance you may have to thinking in probabilities. When you've worked through all that resistance and you're confident that you've learned to think in probabilities, then there's no reason why you have to continue to trade mechanically unless you want to, or unless you know that you have, let's say, a plethora of self-sabotaging beliefs that you don't want to get into, you don't really want to do anything about. Then what you do is you stay in the mechanical stage so that you can make a clear distinction between what you need to do based on your methodology and what your mind may be telling you to do based on the fact that you've accumulated too much money and you might start sabotaging yourself. Because at least in the mechanical stage of trading, you can make a clear distinction between what you need to do in any given moment and what you can't do. Whereas in the subjective stage of trading, that line is really blurred. And it is very easy for self-sabotaging beliefs to enter into the equation. Okay, you get the difference? So other than that, if you guys have any questions, because I'm not going to give I just don't want to do it. I'd rather do it tomorrow morning. What? Well, what stories you want? What do you know?
Trading.
Well, what,
What was your best day?
Well, there's probably one of the most interesting traders that I ever worked with was in the bond pit, and I worked with him for quite a while, and I'll give you something. I'll give you an example of when I said that it's your state of mind that'll determine your results as opposed to the amount of time that you expose yourself to the market or the opportunities. You could say that, I mean, this guy, he loved to trade, and he was, back in the early 90s, one of the biggest traders in the bond pit. I don't know if you'd know his name or not if I said it, but he wasn't as big as Baldwin, but there would be times his largest position he'd put on would be about 5,000 contracts, futures contracts, but his normal position was between 300 and 500 contracts. So one contract in Treasury bond futures, a one tick move, the smallest incremental move in Treasury bond futures is worth $31.25. So 100 contracts would be $3,125 or $33,125, and 500 contracts would be over $15,000. So his normal, let's say if you put on 500 contracts, his normal position between 3 and 500, one incremental change in price was worth about 15 grand in or out of his account. And the bonds, especially back then, they could easily move 10 ticks in a matter of seconds. So you're talking $150,000. And you could easily be subjected to 8 to 10 tick price vacuums, either for or against you. So you're talking $150,000 in a matter of moments. And like I said, there were times where he put on thousands of contracts, not just hundreds. So, you know.
Was he a scale trader?
Scale trader?
Did he scale into his positions as differentiation from scaling out?
Well, sometimes he'd take on the whole pit practically.
Okay.
And it was, I had many other clients in the bond pit who watched him and said that there were times it would be like watching Michael Jordan trade bonds. He was good. He was really good. And it was also that he just loved what he was doing. He loved being there every moment. It was hard for him to leave. And he really didn't give a shit about the money. And the money was truly irrelevant to him. In fact, out of all the people I've ever worked with in my life, I've never met anybody who was on the extreme, I mean, way over here in terms of how little money meant. Just didn't matter. But he had other problems. When I met him, it was in May of 1992. He had a real bad day. Someone he ran into had come to one of my workshops and said that he should call me. He did. We had an appointment. Didn't really, in fact, we had a couple of appointments, and not really much happened. He just, you know, I tried to explain some of this material to him, and he wasn't really into it or even grasping it for that matter. So I didn't hear from him for another couple of months, and I actually didn't hear from him at all. I heard from his wife, who called me. I never even met her, and she called me and she was hysterical because he was gonna have to mortgage the house because of a bad day that he had. And when I met him in May of that year, 1992, he had approximately $10 million flow in and out of his account from January until May. That's the kind of swings that he was on, okay? $10 million in and out like this, okay? The most he'd ever accumulated at the end of any given year was about $600,000. That's the most he's ever been able to keep up to that point anyway. So she was really hysterical and wanted to know what I was going to do to, you know, fix her husband. And I wasn't even really working with him. And so we started working together on a real consistent basis, virtually every day. And that was in July of '92. And so from July of '92 until the end of December, he had $5.5 million. And then he went on vacation with his wife, and on vacation bought this book called The Coming Collapse of either the Bond Market or the Interest Rate Market, and bought into the concepts in the book. And from when he got back off from vacation that year, bond market was in one of the biggest rallies that it ever sustained of all time, and every day he was going in thinking the market was going to collapse based on what he read in this book. That wasn't an accident, by the way, in terms of everything else that was going on in his life. And by the middle of March of 1993, he was so desperate over the fact that he'd lost just about half of the $5.5 million. He was down to about 2.2 million. And I was telling him virtually every day, because we were talking almost every day, sometimes for an hour a day. You know, this is the way you need to think. This is what you need to do. This is how you fix the situation. He just wasn't listening until one day he called up and he said, "Okay, I'll do anything." And he meant it. I'll do anything. And so, and I said, "Here's what you've got to do. I've noticed that you're capable of staying properly focused about a half an hour a day. That's it. And so if you want to fix the problem, you only get to trade a half an hour a day."
What was his first response?
Well, that was really tough because he just loved doing it. And it wasn't just a matter of him loving to be in that pit because of the way of life that it provided him. It was like there's a work ethic in the futures pits. There really is. I mean, it's like where you stand in that pit is very important. There are territorial constraints and territorial, let's say, dynamics involved, because if you're not in your spot and you're not in your spot all day long, it means someone else is going to take that spot. And these guys do get into territorial wars all the time. I mean, I've worked with traders who get into these territory wars about where they want to stand, and each one of them gets there, you know, like 10 minutes earlier every day until they're like getting there 3 or 3:30 in the morning, until one of them eventually gives up. You know, and they go through this a lot. I mean, this is not uncommon at all. You know, they're basically got this range war going for this one little square foot of where to stand. So so there wasn't just that. It was also the work ethic. In other words, when you trade, when you have access to order flow. In other words, the kind of order flow that's coming from off the floor. You know, a lot of that order flow is not really trading. It's virtually free money. Do you know what I mean by free money? It's riskless. That's really what most of the locals in the pit are looking for. They're looking for the riskless free money. In essence, what you're doing is that, and they're not always legal trades, by the way, because all trades are supposed to be open outcry. But if you're standing next to a floor broker that has access to order flow of both buys and sells, and there are market orders coming into the pit, and there's a spread of 1 to 2 ticks between the bids and the offers. Well, if I've got an order to buy 100 contracts at the market, and you know the bid is 08, and the offer is 10. Well, I'm going to be selling them. I'm going to be selling them or buying them at the bid and selling them at the offer to my buddy standing next to me. Now that's a 2-tick spread on 100 contracts. You just made 200 ticks. Was there any risk? Because he's going to take the other side of both orders. All you got to do is cart it up. His buddy's okay. Cart it up 100. Okay, you bought 100 at 8. You sold them at 10. Where's the risk? See, that's not trading. That's just basically free money. Now you got to pay a price to get into those situations. It's not as easy as you think. Because, you know, the guys that are controlling that kind of order flow, they expect favors in return. It's just not that simple. But well, you name it. You name it. It's an extreme environment. You name it. Anything your imagination can think of was about what it entails. But anyway, but it's not just that. It's not that. And I'm not saying, even implying that he had access to a lot of those trades. He really didn't even need that, because he was really just a good trader in terms of his ability to be able to perceive, you know, where the direction of the market was and what he needed to do.
Was there a particular time that he traded?
Oh, I'm going to get into that. Okay, and that's really part of the whole story. As a matter of fact, it's an important part of it. In that, like I said, he loved being down there. He loved doing what he was doing. But at the same time, his ability to remain properly focused was about a half an hour. An hour at the very outside. The rest of the day, he was just all over the place. So, and you got to keep in mind one thing. When you're trading at a level where each tick might be worth $15,000 or more, it doesn't take much to screw up. Now, you're standing in a pit. You've got literally, you know, I don't know how many guys can stand in the bond pit, over 1,000, I think. And, you know, they're all screaming. They're all in close proximity to one another. They're jostling with themselves. They're screaming into your ears. You're getting pencils poked in your body, your face, or whatever. There's all kinds of bodily smells going on. There are guys who do not want you to make money, okay, and will purposefully distract you. There's a lot of things that the order fillers do to suck people into a trade, big locals, you know, to take the other side of a trade where they know for a fact that, you know, that someone's going to hit the market with a huge bid or offer they're sucking you basically what they virtually know is a losing trade. So, and not only that, it's like if you're in one of these trades and there are bids and offers that you're leaning against to get in or out of a position, and let's say you're in a position and, you know, there are bids and offers available that you can hit to, let's say, get out of a trade, out of a 500 lot trade at a 2 or 3 tick profit, you know, and then all of a sudden, you know, just someone says, hey, and you turn your head and those bids or offers disappear. And next thing you know, there might be 2 or 3 ticks lower. Now you're looking at a scratch where you had you know, like on a 500 lot trade, you had 1,500 ticks available to you. Now you've got 0. You're going to scratch a trade, or you're going to think you're going to get your 3 ticks back, okay? Or now it's 1 tick against you. Now you got 500 ticks against. Now you're a 500 tick loss, 1,000 tick loss, 1,500 tick loss. So yeah, okay. What are you going to do? What are you going to do? And you're thinking about, oh, if I just hit that damn bid for the 3 tick profit. Okay? All it takes is just this. Just this momentary, that's all. That's all it takes. And so his ability to stay completely focused in what he needed to do and when he needed to do it, like I said, was about a half an hour a day. And so that's what I said. You want to stop this? Then just trade a half an hour a day and find something else to do with the rest of your day. And he was so desperate that he did it. No, wait a second. Go ahead.
For most people to stay at that level, it's just your body's working on it's such extreme sense of awareness that it is hard for a lot of people.
Oh
to
yeah.
focus
Oh, absolutely.
any longer than that.
Oh, absolutely. It would be the equivalent. The kind of stuff that he did was equivalent to if you can imagine being in the seventh game of an NBA playoff. Okay, the score is tied and there's 1 minute left.
Right.
Okay, you're talking intense.
Every day.
Yeah, this is every day, right? This is every day, all day long, intense. So, and in trading in the zone, there's an analogy that I use where it's like someone building a bridge over the Grand Canyon. Okay, like when you're trading just one futures contract, you build a bridge over the Grand Canyon. It's like, okay, the bridge could be as wide as this room. What's the possibility? What are the possibilities? I'm going to walk over this bridge. I'm going to fall off. Even if I'm staggering. Okay, it's like I got a lot of room, big margin for error, right? Now I could fall off, and next stop is a mile down. But as you start trading in higher volume, meaning that as your contract size grows, that bridge, the equivalent of that bridge, basically narrows. Narrows to the point where you're trading 500, 1,000, 2,000 contracts. You're basically on a tightrope. Okay, now you're on a tightrope over Grand Canyon. And what does it take to knock you off? Well, if you're on the tightrope over Grand Canyon, it could take just not even a very hard breeze, but a relatively gentle breeze might cause you to lose your balance and fall off. That gentle breeze in the pit is the equivalent of one distracting thought. That's it, just one distracting thought. He went ahead and did this. And he said, well, what half an hour of the day should I trade? And I said, you'll find it won't make any difference. Pick any half an hour that you want. Because regardless of what half an hour it is, regardless of how much volume is available in that half an hour that you pick, whether it's a lot or whether it's a little, based on your ability to trade and the fact that you're trading, that you know that you only get a half an hour to do this, and you have the skills to do it, and the fact that you have maximum focus going into it, you will extract the maximum amount, whatever it is, in that half an hour. So it won't make a difference. It just won't. He didn't believe that. He really didn't. He found out that it was true. It did not make a difference. He averaged, while he did this, he averaged $180,000 a day, almost every day, for just a half an hour. Changed the whole character of the bond pit. The whole character of the bond pit, because all these other people in the bond pit who are there grinding it out all day long are watching him stroll in, stay a half an hour, and walk out with a whole boatload of money, and they're thinking, hey, what am I doing? Now go ahead and ask your question.
How did he maintain his position? Meaning his 1 square foot.
It really wasn't a problem. Just the fact that he was a half an hour. They just
because of
yeah,
his
he was such
stature?
because of his stature. They stepped aside.
It's a pecking order now.
Yeah, it's a pecking order, right?
Was he able to keep his profits after a while?
Well, he ended up in a really one of the bitterest divorce proceedings you could imagine, and his wife actually got him enjoined from even going into the pit. He couldn't even trade for almost 2.5 years.
Wow. Oh, because she didn't want him to lose the money.
That's right. Well, they spent it all on attorneys anyway, so it didn't make any difference.
I've seen a guy, his wife used to come up at 9:15 in the morning, and they were going through they had problems, and eventually got to work. Just rag and rag and rag. The guy just kept
Nice way to start
trading,
the day.
and it had an effect.
How could it not?
Yeah, you'd think his wife would, and he'd say, don't call me now. I hang up on people at times. I can't talk, bye.
There you
They
go.
understand.
No. I did that once.
Go ahead, John.
Do you ever get traders that are trading well that then come to you? No.
Sure, yeah. Yeah, I know what you're saying, yeah, right.
You know, if A is, you know, Wayne Dyer talks about this, A is perfect health, and B is where we live, and C is death. Most of us go see a doctor when we're at C to get back to B.
Right.
Very rarely are we at B happy or pleased or satisfied and take the steps to get to A to a higher level.
I get two kind of traders, okay? Or I don't really do much of this anymore, but I used to get two kinds of traders. The ones who were really successful and just wanted to become more successful, and the ones who were in a state of absolute desperation. Everyone in between, pretty much no.
If someone's trading at the high end of that, is there more room?
Oh, there's always more room, absolutely.
So are you looking at their behaviors and finding out that they're successful in spite of some negatives, so if we pull the negatives out?
Sure, absolutely, yeah, absolutely, absolutely.
But you can't see it as a trader until someone observes the patterns.
It's difficult unless you've acquired the kind of skills that, you know, would take a long time to acquire. It's a lot easier for someone else to, you know, to spot it. It's difficult to do even with the skills. When you the kind of self-analysis that you're talking about, it can be difficult, you know, to do on your own. Some of the beliefs that we have are so entrenched and create such create these kind of closed loops that are really difficult to see into on our own, because our lives are in a pattern that is so self-evident that it's almost inconceivable that we could even question the pattern, because it's been a pattern that's existed all our lives. So therefore, it is a fabric of reality instead of just something that I learned and I'm perpetuating it over and over and over again. Is the guy on the tape, does he have a real rough voice?
I think it's the same.
It sounds like him.
Is it Bob Monroe?
It sounded like an old.
Okay,
Yeah,
and
it
then
sounded like an older guy.
and at the end of the tape, wake up! Does he do that?
No.
Oh, he doesn't?
Fortunately, he doesn't do that. I'd be kind of panicked. You're all mellow.
That wouldn't be very nice.
Get up, Pledge.
Well, the tapes that I used to listen to is what he did.
I'm glad you didn't give us.
Wake up! Wake up! Yeah, really, yeah, really. It seemed like it anyway. I mean, you know, you're in this kind of deep, real quiet space, and you know. Oh.
So how do you, if you want to buy one of those other tapes?
Well, I gave you the catalog.
No, there's no price list, there's no place.
Oh, there isn't? Oh, just call them up. You get, look, we're distributors. You can call us. We don't really, I mean, that's not something we do. I mean, we'll order them for you, but you can order them direct.
Okay.
Right from
I just
the.
kinda wondered, you know.
Yeah, no, it's no problem. I thought there were, the catalog included price lists. I'm not, the tapes aren't very expensive. I don't really remember how much they are, but I think they're like, I don't know, maybe $20 or $25 or something, or I don't know.
Just, there's prices for the books.
Yeah. And that's not the only, I mean, they have a number of different types of tapes to do a number of different things. Some would be considered pretty bizarre, but, and I've been down there as part of their professional group a couple of times, and for a whole week with other people in other industries. Mostly, I would say, people in the psychiatric industry that use their products. And they get together and talk about, you know, how the products can improve and you know, other uses for them, and just, you know, sharing a lot of ideas. It was mostly like a summer camp for adults, basically, is what it really amounted to. It was really a lot of fun. Well, let's kind of review from yesterday. We went through a lot of material yesterday, and we're going to go through a lot again today. Anybody got any comments or ideas about some of the stuff that we talked about yesterday? Everybody's really just at peace with all this and ready to go, huh? Go ahead. Go ahead, John.
No, I think if you know, on the way home, if you think outside the box, you know, I came here with different agendas other than trading. Is what I challenge myself with every day, trying to think outside the box, how to look in the mirror and become better. And if you take the time to do that, and you have the courage to actually look in the mirror and look deep, I mean, some of that stuff yesterday was life-changing, and you're just not going to get that. I mean, you get access to that information with yourselves. Just if you're open to it, it can take a wound and heal it immediately.
That's right. Absolutely. I mean, we're going to get into in just a little bit what I call like a practical philosophy for change, and just a real practical way of looking at why consciously altering ourselves and changing ourselves and adapting ourselves can be so rewarding, because I think it's really one of the keys to happiness. But it does, you know, the fundamental component is what John just said. A willingness to think. A willingness to think, what he, as he referred to as outside the box, but basically just a willingness to think. Because nothing constricts what we can think about. Nothing. Only one thing. Let's put it this way. Nothing can limit what we can think about except for one thing. And what is that?
Beliefs.
What?
Beliefs.
Nope. Nope.
Fear.
Fear, which would mean which would mean what? What are the implications of lack of fear? Or what are the implications of a fear of thinking in a certain direction?
Because you limit yourself to things, you're not open to all the data that's available to you.
Okay. Well, I was just thinking like just a lack of willingness. That's the only thing. No desire.
Lack of desire.
Yeah. Because that's really what it takes. That's what all of this takes. It all boils down to, what do you want? What are you willing to focus your energy on with conviction? Because regardless of what technique you're comfortable with, if you choose to go through a process of transformation, it really doesn't matter what technique you use. I shouldn't say it doesn't matter. I mean, it can matter if you're using it inappropriately and you don't know what you're doing. But technique is not as critical as desire. So there's really only one thing that stops anyone from thinking outside of what they've learned to believe. And that's a lack of willingness. Correspondingly, all it takes to tap into creative or inspirational information is a willingness, desire. If the desire is genuine, you'll get the information. That's an absolute fact. It really is. And I know maybe for some people who you know might not have experienced this or experienced it on a regular basis, that's all it really takes, is a genuine, sincere desire. And if you try it and you don't get the information or don't get any information, then I would say that your desire was not genuine and sincere. It's what would commonly be referred to as lip service. You're saying the right words, but you know, the sincere energy isn't behind the words. And that's really what it takes.
Along that same line though, if you've never had change in your life to where you can see an A-B situation, to actually put yourself to think that it could change is a huge gap.
It really is, yes.
But once you find someone that actually gets that A-B and can say, I was a different person yesterday, I had a different thought process yesterday, if that accelerates, you're gonna have just a dynamic curve straight up.
Oh, yeah.
It's just that first huge step that makes all the other steps fall along the way.
Right. Yeah, good point, John. I would say those kind of changes, those kind of first step changes for me came in years. Years.
Yeah.
But, you know, that was a long time ago and didn't have access to the kind of insight and material that's available today too. Or let's say it was available but not readily accessible like today, put it that way. Things have changed a lot in the last 20 and 30 years, they really have. I mean, when I was writing The Disciplined Trader back in, you know, starting in 1982 and you know, in dissecting the dynamics of beliefs and belief systems and things like that, I mean, at the time I thought I was really way out there and really afraid to even share the material with people because I thought they'd think I was crazy. Really, I'm serious. Especially the trading community.
I see that all the time. Not all the time as much, but there's a certain degree of people I've come across over the years as traders who kind of think that this aspect of learning about yourself and thinking that that's going to help you as a trader is a little bit unmanly, I think, is the way that most people think about it.
Oh, sure. And not as much now as what it used to be.
No, right.
I mean, but, you know, but certainly back in, you know, when I was working predominantly with floor traders in Chicago, back in the 80s, I mean, you know, I would say the vast majority of floor traders looked at Mark Douglas like, whoa, you know, get away. I've spoken at conferences. There was the first conference I actually spoke at. Tim Slater invited me to speak at CompuTrack in 1980, April of 1983 or 1984, I don't remember. And down in New Orleans, and it was kind of amazing how the chain of events occurred to even me getting that invitation in the first place, because it was just really bizarre circumstances. Or synchronicities that were really, that were kind of mind-boggling to me. But anyway, I was invited to go down there and speak, and one of the, and at the time, I mean, I had no credentials at all. I had nothing. I really did. I had absolutely no credentials to be doing what I was doing. But Tim, and it was all really just based on a conversation that Tim and I had at dinner. And I just happened to sit down next to him because some woman broke a date with me. And, or I wouldn't have even been at that particular banquet. And, you know, she broke this date. I was waiting for her, and I happened to sit down next to Tim Slater. Didn't even know who he was. And we talked, and then I found out later on that, you know, he did these conferences, and thought, well, since I was working on the psychology of trading and he had technical analysis, let's put the two together and do a workshop or something. Well, when I called him up, and he said, well, yeah, I'm doing a conference, and he said, well, think about, you know, maybe adding you to the schedule. I'm thinking, oh man, you know. So he called me back like 2 or 3 days later, and he said, okay, you're on. And from that moment on, this was like January. And the conference was in April, and from that moment on, I mean, I just obsessed over this presentation. I mean, totally and completely. I scrutinized it. Sometimes it might have taken me a week to get a sentence. I mean, literally, I'd go over, you know, just over and over and over again. So when I got down there, I mean, it would be a huge understatement to say I was really, really nervous. There were 850 people at that conference, and there were probably, I don't know, maybe 18 or 19 speakers or something like that. And of course, all the other speakers, they'd written books and all that kind of stuff, and had reputations. And so Tim had a general meeting for everyone the first day of the conference in the morning. It was like, I think, around 9 o'clock in the morning or something like that, before everyone started. And one of the first surprising things that I found that when I got down there was that Tim had me speaking like either 6 or 7 times in a 3-day period, and all the other speakers were only speaking like twice. I'm thinking, well, there's got to be a mistake here, and and I didn't want to say anything to Tim, and I'm thinking, there were some things that just weren't adding up. 1, the number of times he had me speaking. 2, the material that I had submitted for the the big book that you get when you go to these conferences wasn't in the book. And it wasn't much material, but because I didn't really have any material. but it wasn't in the book anyway, and it was just in the packet. In other words, you get one of these huge satchels and the book's in there, and my stuff is separate. So, I'm sitting in the middle of the audience listening to Tim talk about, some of the restaurants to go to in New Orleans. In fact, I think it was it Mardi Gras? No, it wasn't Mardi Gras. Anyway, what to do in New Orleans and what to watch out for and be careful of this or whatever. And then he said, and then he did this disclaimer thing about, what the speakers say, CompuTrack has no legal liability and all this kind of good stuff. And then he said, but I want you to pay particular attention. Now I'm just sitting in this chair, right? So I want you to pay particular attention to this material that we didn't put in the book specifically because we want you to pay particular attention to Mark Douglas. And I'm like, and I'm just like, I was like, my heart almost exploded. It really did. I was like, what the hell is going on? And I mean, I didn't even hear the rest of what he said because it just freaked me out. So I had to speak not really too much longer after that, maybe 2 or 3 hours after that. And I'm thinking this whole time that I'm down there, or before all this, that okay, nobody knows who I am. It's like psychology of trading, not something that people are even paying much attention to. How many people might end up in one of my sessions, right? 5 or 10 people. Okay, I can make an ass out of myself in front of 5 or 10 people. It's all right. Okay, I can do that. And so I'm standing in front of this door where where the sign says Mark Douglas, Psychology of Trading. And I'm talking to another one of the speakers. I don't remember his name. And he was just, he was being real nice. And when I say that sweat was literally dripping off my hands, I am not exaggerating. It was dripping off my hands. And I'm even getting nervous even talking about it. I mean, it's just, but the memory of going back into that experience is putting me back into that experience, in that state of mind. So we're talking, and I'm watching people kind of stream into this room, and I'm getting upset. I mean, I'm watching people walk into this room. I'm standing, maybe 10 or 15 feet away from the door, and I'm thinking, why are they doing this to me? Why? No, why are they doing this to me? And I don't understand it. And I'm, I kind of glance in the room. There's like maybe 70 or 80 people in there, and I'm really pissed. I'm thinking, come on. I wouldn't go listen to me talk. Why are they going to listen to me talk? And so the other speaker left because he had a session himself. So I was standing there by myself, and it was a real defining moment in my life because I was more than seriously considering bolting. I was going to bolt. I really was. I was standing there thinking to myself, I knew this would be it. I knew that Tim would never ever invite me back to another conference. I mean, that's what I was contemplating at that point, whether I could accept the deep sense of regret that I would experience by bolting, and what I was going to say to Tim. And I was running it through my mind, and just like checking the probability out. And like I said, it was. I don't know if 50-50, 60-40, whatever in terms of 60 in terms of bolting. But just at this right moment, I mean, like I said, this defining moment as to whether or not I was literally going to run, this person came up to me, and someone was going to walk into the room. He walked over to me. He saw the name tag, and he says, oh, he said, you're Mark Douglas, right? And I said, yeah. And he said, well, shouldn't we get going? And I said, okay. And I walked into the room, and it was really weird because once I walked into the room, and because they didn't have anybody introducing you or anything else like that. It was just, you just did it on your own. Once I walked into the room and got in front of everybody, I was fine. And not only that, I didn't even use my presentation. I just spoke spontaneously off the top of my head. And I had to, because that first presentation was a little bit shorter than the 2-hour presentation that I prepared for. Well, anyway, I did a really good job, and did such a good job that the next time that I spoke, there were like even more people in the room. And then by Saturday afternoon, this is on Friday, by Saturday afternoon, I literally almost had the whole conference in the room. They were lined up around the walls and out the door. And I mean, it's just, and there was the same people that were coming to these presentations over and over and over again. And I was just like, I was really astounded, absolutely astounded. Until Sunday morning, I was in an elevator with somebody, and then I figured out what was going on. Like, what was this phenomenon? And some guy, you know, he looked at me and said, "Oh, you're Mark Douglas. You're the guy that's making us all feel good." Now, that was not my intent for my presentation. But I mean, that wasn't the goal of my presentation. But as it turned out, I was giving people information about the nature of trading that they never ever heard before, meaning that there isn't anything wrong with you. Because back in the early 80s, especially futures traders, everyone lied about their results. Everyone was losing, literally everyone was losing, and everyone was saying that they were winning. And so all the people that were saying to their friends, "Oh yeah, I'm doing great," but they were losing their ass, and their friends were saying, "Oh yeah, I'm doing great too," they all thought it was just them that was lying. They didn't know that everyone else was lying too. And so, and because I had worked at Merrill Lynch, and I saw how virtually everyone, and I worked at one of Merrill Lynch's biggest offices in Chicago. I had access to the printouts of their customer base, where I could say that 99% of all their customers were losing money. And I said that in the conference. I mean, I just said that to everybody. It's like I just lifted this huge weight off their shoulders to think, okay, there's nothing wrong with me, and there are specific reasons why I'm losing. And so as a result, everyone wanted to hear this presentation over and over and over again. Now, the next year when I went back, and Tim invited me back to speak, I thought, okay, this is really good. What I'll do is I'll really give them the meat. Okay, I'll you know, instead of, you know, because that first one I didn't really get into a lot of depth. So I said, okay, I'll really put together a presentation and give them some real substance. I would say the first presentation that I did, I had probably 300 people in the room, and I lost 200 of them in the first 20 minutes. And it's been like that ever since. So, Dave, when you're talking about people, you know, and I have found it really, the industry, you know, the industry is evolving. You know, back in the early 80s, this message just was not very well received at all, especially if there was any depth to it. But, you know, things are changing a lot. They really are. There was, which reminds me of the very first time I ever did a 2-day workshop. It was sometime in the late 80s, not the late 80s, maybe 1986 or 1987. I was doing 1-day workshops, but I'd never expanded it to a 2-day. So I'm thinking, okay, I'll expand it to 2 days. And I had probably 11 or 12 guys in the room. And they were mostly all floor traders. Actually, mostly all from the S&P pit at the Chicago Mercantile Exchange. And so it just so happened it was in October, in the weekend where you have to turn your clocks back. And I'd forgotten all about that because, you know, I was preoccupied with the workshop. And so I got there, you know, I got to the workshop about a half an hour early. And of course, nobody's there. And I think it was supposed to start at 8 or 9 o'clock. And at the time it was supposed to start, nobody's there. So it's like, and I'm thinking, oh my God, I really did it this time. Nobody's coming. Until somebody finally showed up and I figured out that I didn't do my clock. So, you know. So, see, the thing is, and what this all really gets down to is something that we talked about Friday night and yesterday, is that you still don't need to have any of this to put on a winning trade. That's the whole point. None of this is necessary to put on a winning trade. None of this is necessary to put on 2 winning trades or 3 winning trades. But eventually what we all find out is that we can put on winning trades. But there's a huge difference between being able to, or let's say, you know, getting a few winning trades here and there, or even on a consistent, you know, a fairly consistent basis, there's a huge difference between that and, of course, and what your bottom line results are when you experience huge drawdowns or a series of drawdowns as a result of mental errors. And when you become dissatisfied with that, you start looking for something to remedy the situation. And that's what takes a lot of work. Because, like we've been saying all along, it has everything to do with the way you think and in essence, the way you live your life.
Just so I'm clear on kind of where we're probably going to be going today, I think the essence of what we were trying to bring out up until this point was getting comfortable with the whole notion that it's your belief structure that may be limiting you in whatever aspect of your life, or perhaps more specifically your trading. I'm under the impression that what we're going to try to do today is that we're going to try to not only identify those beliefs, but also work on pattern or work on techniques to neutralize them or redirect the energy, however you want to phrase
Exactly,
it.
right.
Okay.
That's exactly what we're going to do today. Remember that the kind of problems that we face as traders are going to fall into pretty much two basic categories in terms of what's going on inside of us. We have a like genetically encoded ways of thinking, meaning our minds are wired to think in certain ways that cause us to believe that what we're experiencing in this now moment is identical to something that's already in our minds as a memory. That's a problem. Because we know what's the reality of the situation. What's true? What's really true? Every moment is unique. And see, because of our mind's inherent, propensity to associate, it's that mechanism that we have to compensate for. So we have to do something specific to compensate for that mechanism. That's one of the things we need to do. Because the reality is, every moment is truly unique. That is the truth. Our minds make it seem as if this moment can be identical to something I've already experienced. Sometimes there'll be a correspondence, okay? There will be enough of a correspondence that we'll experience some degree of satisfaction based on what decision we make, because our minds associated this now moment, this unique moment, with some memory that we have. But as traders, there's too much of a capability. I mean, there's too much of a potential, let's say, to make catastrophic errors by allowing this mechanism to cause us to think that we know what's going to happen next. See, so what we want to do is take that gap away between the reality of each moment being unique and what our memories say, and say, you know what? I need to install a mechanism in my mind that will not let me think that this moment is anything other than unique. That's what we're doing. I need to install a mechanism in my mind that will not allow me to believe or think that this moment is anything other than unique. That way, my mind is now open to receive anything that may be of relevance in terms of what could satisfy my desires or goals. So that I can make a decision based on all the information that's available, not just what might satisfy my expectations. And remember, my expectations are going to be what? Based on what? What are my expectations always based on? Well, beliefs, yeah. Because an expectation is a belief projected out into some future moment. So that's exactly what we don't want as traders. We do not want to be basing our decisions on our expectations, because when our expectations are fulfilled, we feel satisfied and happy. And that's something that we all desire. And when our expectations go unfulfilled, we experience emotional pain. This is a universal characteristic of humans. Probably of anything that's alive and can think. I mean, we've got cats, and when they don't get to go out, they're in emotional pain. So what we don't want is we don't want to be perceiving information based on this limited kind of, this limited filter, so that only the information that makes me happy gets filtered into my mind or gets allowed in, and all the information that has the potential to make me feel anything other than happy gets, gets filtered out in some way, either completely ignored or altered or distorted in some way. So we need that mechanism. So this is what I was saying before. What I was saying before is that we're going to use our trading. We're going to use the actual, let's say, process of trading to create these mental mechanisms that will cause us to think that, no, this moment is really unique. And that doesn't mean you can't feel or sense or know what's going to happen next, because you can. But it'll be from a different context. It won't be from a rationally based context. It'll be from an intuitively based context. These are worlds apart. Because if it's genuine intuition, it seems like as if I'm going to maybe contradict many of the things that I've said earlier, but if it's genuine intuition, you'll always be right. Because in essence, you're in the zone. That is, that you spontaneously tapped into that framework where you are in complete harmony with, say, with the market consciousness, that collective consciousness of everyone who's participating, and you are in the zone. So it's not a rationally based knowing, it's an intuitive based knowing. But it's our rational mind that'll always, one, keep us from getting into it. Because if I think I know what's happened, if I think I know or believe what's happening at a rational level, it means that my knowing is coming only from my past. You guys with me on this? The knowing is coming only from my past. My past cannot. What's that? Well, you can predict the future. You can. Anybody can guess the future, and that's not. I'm not saying you can't predict the future, but let's put it this way: my past, based on what's already in my mind, can't know a truly unique moment, because a truly unique moment is something that never existed. My past can only know it afterwards, or my rational mind can only know it after the fact.
So how do you reconcile that with intuition? But if your intuition is saying go, 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 and
Your intuition won't say go, 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 go. Intuition doesn't work like that. Intuition isn't compelling in any way. Your rational mind is compelling. You feel compelled to do anything, it's coming from your rational mind. Your intuition is just spontaneous. You just find yourself doing things. Your rational mind is the one that's going to pull you out of doing it.
so how do you?
It's like it's doing something without weighing and judging. You see, your rational mind weighs and judges everything based on your past. When you're in that kind of a zone and acting spontaneously and intuitively, you won't be weighing or judging anything. In essence, you'll just be finding yourself doing something. It's like your rational mind will wake up and say, hey, what am I doing?
Mark, it's kind of abstract. Can you just show me? Can you show me a trade that's rationally based versus?
It would, John. It wouldn't make any difference. Okay. You see, in terms of showing you a trade, I mean, I could pull up a whole bunch of charts.
I'm just thinking of, tell me a trade that's rationally based, versus, an example.
Any trade that you think, any trade that's based on a pattern that you know at a rational level would be a rationally based trade. Meaning anything you've already learned about, and it's in your mind as a memory. Whereas something, have you ever had kind of a gut feeling about something, but didn't really have a way to judge it from a rational perspective? That's what I'm talking about. It's, I'll give you an example. I don't even know if I have that chart with me, but there was a chart I was doing a typical pattern I'm going to show you guys later, an ABCD pattern where AB equals CD. It'd be something like. This would be like a 618 retracement, and like this. And these two lines right here, these two waves are exactly equal. And one of the reasons why I use Q charts is because I can click on this line. When I get this wave, when I get this low and this high, and this retracement right here, and I get an isolated low right here where it looks like it might start doing this, what I do is I clone this line, click on this line, I clone it, and I can actually move it here, put it on this low, and see how the market reacts coming up to point D, okay? Well, I don't remember exactly when it was, but there was what I thought was a perfect ABCD setting up in the Dow. It was last year sometime, and it was on a 60-minute chart. And you know, of course, the higher the time frame the chart, the more significant the move. So I put on my chart buy D. I'm supposed to sell D. Didn't even realize buy D. Okay, that would be okay. Buy D. Okay, so when the market, I actually didn't trade the day that this happened, but the market came up to D and literally just, I mean, blew right through it. I mean, you know, it was like a 150, 200 point move. So that would be something, you know, it's like, see, I don't look at that as being an accident that I made, that I made that kind of an error on the chart by saying buy D instead of sell D.
You know, that has happened to me, and then I spend the next week trying to quantify it. How did I do that? And I can't I don't know how it happened. So I'm in that trader's hell
Right.
that you talked about.
Right. You know, we're talking about, you know, trading intuitively, and it's really intriguing. But keep something in mind that, you know, Sean just said, is that one of the things I'm going to suggest to you is that even when we get to the point in the workbook where we talk about it, we're talking about it now, but let's say if you haven't trained your rational mind to trust intuitively based information, the best thing to do is just notice it and not trade intuitively, not act on it. Just notice it and write it down and pay attention to it, that every time it happens, so you can start building a backlog or repertoire of rationally based information saying, I can trust this. And there's a reason why I say that is because you can manufacture, you can get so excited about the idea that you can, you know, have this sense of knowing of what's going to happen, that you can, at a rational level, manufacture a feeling that's very similar to that kind of intuitive sense. And the problem is that that manufactured feeling isn't intuition, and you will virtually always be wrong when you're operating out of that sense of, let's say, I call it like a hope that feels like intuition and genuine intuition. What you really have to do is get yourself to the point where you virtually have no potential to hope whatsoever. Like, why would you have to hope for anything? Once you really trust yourself, you don't have to hope for anything. So if you still have the potential to hope that the market does something for you, and that's in essence what you're saying. I'm hoping that the market does this. I'm hoping that the market does this for me. And the only reason why you could hope that the market does anything for you is because you don't feel like you have the resources to trust yourself to do it for yourself. Otherwise, hope wouldn't exist. So as long as you have that potential to manufacture that sense of hope that feels very much like intuition, where you'll find it very difficult to make the distinction between the two, the best thing to do is just not trade intuitively. In other words, don't act on it right away. Let yourself work up a nice repertoire so that you can start trusting yourself. Trusting it, put it that way. And that might take a long time.
You took the example of buying pullbacks,
Mm-hmm.
right? You get a narrow range day or something and you're looking to buy over the top of that. And you say, okay, the rational idea is it's pulled back, we found another level of buyers at this price, and so I'm buying over that resistance prior day. That would be a rational thought,
Mm-hmm.
correct?
Yeah.
The intuitive side would be, it's pulled back 3 days, I'm gonna go bid here because my gut is, or I intuitively think, most pullbacks last 3 to 4 days, and I'm hoping that I get the bottom.
And I would say that's not intuition.
Right.
Based on the way I define intuition, that's just another rationally based.
That's that manufactured.
Yeah, that could be manufactured, rationally based
Well, if you're
thought
thinking-
process.
it's not like if
See,
you-
see, you're thinking about it. You're not in it anyway.
Right.
See, the whole point is that you're really not thinking. You're not weighing or judging anything. You're finding yourself doing something. It's like it's like looking at a chart. I'm looking at a chart, and I might have asked myself, 2 or 3 minutes before, well, where's the next best edge? And all of a sudden I get distracted. And I'm not thinking about where that next best edge is. Then all of a sudden my attention is drawn to a line that I would normally have not paid attention to because it's not part of my repertoire of what the market does. But see, intuitively based information is creative. Creative, think about the definition. Bringing forth something that didn't previously exist. I wouldn't have paid attention to that particular line or that particular level. And all of a sudden I've got my attention drawn to it and I think, oh, okay, well, let's put an order here. No weighing, no judging, really no thinking. If you're weighing, judging, and thinking, it's not intuition. It's something that's spontaneous. It's just like when I'm writing the Disciplined Trader and Trading in the Zone, and a technique that I'm going to give you in a few minutes. I'd ask myself a question. Now, if think about this. If I ask myself a question, if I thought I really had the answer, I wouldn't have asked the question in the first place. Meaning that I really believe I don't have the answer. I'm not trying to figure out the answer. I'm not doing analysis, like going through all my memories and trying to work something out, trying to figure out a problem. I'm not doing that. I don't have the answer. And then I forget about the question. Or in that moment. Just you get distracted, you start doing other things. Then all of a sudden, it's like, boom, the information just gets dumped into my brain, or I find myself speaking it without knowing it. That's the kind of stuff I'm talking about. I didn't think about the information that's in my brain. It's now there, and I got to write it down. And I find that if I don't write it down, it evaporates, and I can't reconstruct it. I can't tell you, how many times. It didn't happen that many times because it was just too painful. But the number of times it did happen where I didn't either write it down right away, or I put it in my computer, didn't save it right away, and something happened to my computer and I lost it. That was like, and then try to reconstruct it at a rational level, I couldn't do it. I couldn't do it because it wasn't in my brain at a rational level. It wasn't part of my memories. It didn't have anything to stick to because there wasn't really a framework, because it was new information, new for me. So I'm not weighing, I'm not judging, I'm just asking a genuine question because I don't have an answer and I desire the answer. And if the desire is genuine, you will get an answer that corresponds with your question.
Are you saying that a rationally based trade is something that isn't good?
No, I didn't say that at all, Jeff.
Okay.
No, not at all.
Just want to make sure.
I'm not saying any of this is good or any of this is bad. It's just all a function of what you desire, where you want to go, what you want for yourself in your life.
Because the ABCD that you were talking about is a rationally based trade.
Yeah. Well,
Okay.
Jeff, I trade rationally. Okay.
Okay.
I'm not.
Okay.
Don't get the impression that this is what I do here. Okay. Not every trade is intuitive.
Okay.
I'm just giving you examples of times that it was. Okay.
Ask one question.
And also, I'm not at a level in my life where I completely and absolutely trust it either. As a trader. I'm still working on it.
The example you gave, that was really an error in your technique. I mean, you
No.
the mistake of buying instead of selling.
No, I didn't. First of all, I didn't put an order in the market. Number one. All I'm saying is that I write on the chart what I'm going to do, and what I wrote on the chart was what I should have written, sell D, and I didn't even notice until the next day where I actually wrote buy D.
Okay. That's not intuitive thinking. That's
Oh, yeah, no, that to me, yes, absolutely. That's not see, I don't look at it that way. I don't look at those kinds of errors as being errors, or I don't look at unconscious mistakes as being, as not having significance. I don't look at them as sort of a random thing at all. That was, let's say, at a subconscious level, this information that we're gonna talk about in a minute about where information can come from. One second, Jake. Let me just do one thing. About the different levels of information. You can say that, that there's the conscious, the subconscious, and I'm looking at the intuitive or spiritual, okay? I would say that particular, whatever, what caused me to type buy and sell came from down here. And I didn't notice it at a conscious level until the next day. Go ahead, Jake.
I was just going to say, if you have an unconscious belief that makes you trade incorrectly, how do you separate that? In other words, it's causing you to make a mistake unconsciously, right?
Mm-hmm.
How do you separate that from what you describe as intuition?
I'm not sure. Okay, ask me the question again.
Like, in other words, intuition made you write sell buy D.
Yeah, my intuition told me to buy D.
Right.
Okay.
What if there's something in your brain, which was a bad belief, it caused a trading error that made you say buy here or whatever.
Well, what about
and
it?
It didn't work.
Okay, what about it?
I just say, how do you separate intuition from unconscious belief? You're just not aware of it. That's really the question.
Well, very easy. I shouldn't say very easy. It's just that the criteria is if it was the perfect thing to do, it was intuition. Anything less than that, and it was rationally based. And I'm not saying that you can't make a decision at a rational level that can't be perfect. All I'm saying is that your intuition will always, based on my definition and the way that I look at it, you can look at it and define it any way that you want. All I'm saying is that in my framework, in my context, intuition will always cause me to step into an experience in a way that's in complete harmony with the environment that I'm in that moment, based on what my desire is. Would that be a good definition of it? Do you think, does it make sense?
Basically, it's your goal.
What, Roman?
Basically, it's your goal.
Yeah, it'll cause me to step into an experience in a way that's in perfect harmony with my desire and the environment that I'm in that moment, and the environmental forces I'm operating, let's say, or the environmental forces that are attendant upon that situation. Anything less than that, in terms of an outcome, would not be intuition. I know this is really kind of hard and abstract stuff, but you guys can listen to the tape over and over again, or watch the tape, and as a result, start doing your own explorations in terms of how this works in your life and how you might use it. And let me say something else too. That about 5 or 6 years ago, I was invited to speak at the first annual Intuition conference that was in San Diego. And there were, about 200 or 300 people there, and people from all over the world who investigate the nature of intuition. And one of the things that I came out of that conference with was that nobody could agree on a definition of intuition. Not that there was argument. I'm not saying that people were fighting each other. They weren't. I'm just saying that all the different definitions were mind-boggling. Okay. So I'm just giving you one. I'm not saying there aren't more. Do your own investigation and go on your own path and find what works for you. But and I was amazed too at all the different ways that intuition worked in people's lives. I was stunned. So to take a phrase out of anybody read Conversation with God books by Neale Donald Walsch? Mine is not the only way, it's just another way. So I would say that. And for some of you, it could be a good start, you know.
What I've found over the years is and I'm guilty of, not being consistent with it, but what I try to do is always ask, certain questions, how you can do things better, whether it be business, trading, or other parts of your life. And I definitely find that when you stay on that type of a regimen, it definitely makes a difference. Depending on what you're trying to go, maybe it's the bottom line, maybe it's a relationship, maybe whatever. What ends up happening, at least for me, is you start noticing a change, and then you suddenly forget that regimen was what got you to that point, and you kind of stop doing it.
Sure.
It's so easy to fall off, but if anybody hasn't done that type of stuff,
Do what? To be asking questions?
just always ask yourself,
Sure.
Areas that you're not satisfied with, or even you are satisfied with and want to make better. It for me at least, it definitely makes a difference. Which I think is the whole kind of where we are at this point in the conference.
Yeah, we are. And what Greg said yesterday too about just writing early in the morning. It's a really good technique. Just write anything. What are the techniques I'm going to give you? We can do it right now for even identifying a belief. It's the exact same technique. Only what I do is put a time constraint on it. In other words, you've got a specific purpose. You could say, let's go here. Go to page. Go to page 1 of section 5. One of the first things I say here is when it comes to doing mental work, your attitude is everything. Meaning whether you think you can or whether you think you can't, you'll be right. And that's really true. When you're doing mental work, your attitude about it is virtually everything. So the more you believe in the possibilities that you can do this kind of work, the more benefit you're going to get from it. So if you want to find out, if you want to find out what's in here, okay? First of all, this is at the conscious level. These are the things that we have conscious access to. There may be, you may have conscious beliefs that you have that are in conflict with your desire to accumulate money as a trader. There may be some subconscious, okay? Remember I said yesterday that I think this line between conscious and subconscious is really artificial? In some ways even taught because, when we're children and there are things going on in our mind that our parents can't explain, not only can they not explain it in us, they can't explain it in themselves. They're going to say, just forget about that. Just kind of put it in the back of your mind and just forget about it. And what ends up happening is that the things that we can't explain and we can't deal with, they do, and the things just automatically, in many cases, will drop down to a subconscious level of operation anyway. Okay, but it's like you don't. I'll put it this way: the more you do this kind of work and ask questions, the more this line between conscious and subconscious starts to get perforated and weaker until there really isn't any definition at all. I mean, there isn't any declination between the two at all. You can have access to anything that's in your mind. Not only here, but also here. And it's just a matter of the kind of work that you do. And that work is in essence asking yourself questions. So for an example, I just gave you one example here. You want to find out what's going on? Say to yourself, why can't I accumulate vast sums of money? Now, if I knew the answer to that at a rational level, I wouldn't have to be asking the question in the first place. Now, keep in mind, and I'm going to keep repeating this because I don't know if I have the right words to really convey how important it is that this question be genuine and sincere. Because any lack of sincerity, and you won't get an answer. It's like the forces that exist in the universe, let's say, or exist at these deeper levels, you can't, it's like you can't fool God. If you really don't want an answer, regardless of how much you might say to yourself, yes I do, yes I do, yes I do, if the asking the question isn't genuine and sincere, then you won't get an answer. In other words, you have to be completely honest with yourself. And you will get an answer that corresponds with your level of honesty. So if you're asking a question that you sense you're afraid to get an answer about, then, ask another question that you might not be so afraid about getting an answer. That you can say sincerely and genuinely that I really do want an answer. I really want to know. Then write that question at the top of a piece of paper. And then give yourself about 20 minutes. And what are you going to do for that 20 minutes? You're going to write. What are you going to write? You already said if I knew the answer, I wouldn't have to ask it in the first place. So what are you going to write? What do you think you're going to write? Just whatever. Write whatever thought comes to your mind uncensored. Write your stream of consciousness thoughts, whatever comes to your mind, uncensored. Don't censor anything. Don't judge anything. Don't stop and contemplate it. Don't think about it. If the word or the thought or the feeling comes into your consciousness, write it down. And after 20 minutes, you can go back and reread what you've written. In other words, hopefully, once you get used to the idea of writing uncensored, you're going to find that you lose this kind of conscious thought process of judging what you're writing. In other words, you won't be judging it. You're just going to so busy trying to write your stream of thoughts that you're not thinking about what you're writing. And then when you go back and reread it, what are you going to be reading? You're going to be discovering yourself. You're going to be reading something that came from your mind onto that piece of paper, and you should have, what'll hopefully end up happening is that you'll read something that corresponds to the question that you wrote. You'll have at least an answer or part of an answer, and there should be enough there for you to ask another question, or to stimulate another question, and then put that question at the top of a piece of paper. And keep on doing it until you get to the source of the original question of why can't I accumulate vast sums of money? Because it may be, that's a big one, by the way. You can do smaller ones, but working on one like that could take quite a long time. Yeah, more than 20 minutes.
So it's like songwriting. It's the same thing. That's how I wrote I Love Rock and Roll. It wrote itself in 20 minutes.
Okay, Jake, say that so people can hear it. Okay,
It's like,
you're
no, I'm saying
kind of
this whole thing is like songwriting, basically. Like, I Love Rock and Roll as an example, the biggest song I ever wrote. It was like a complete inspiration. It wrote itself. I was taking dictation. It wrote itself in 20 minutes. It's like automatic. I have no idea where it came from. Actually, I do have an idea. I was listening to the Rolling Stones. It's only rock and roll. I like it. And I had like a knee-jerk reaction to it. I said, what do you mean it's only rock and roll? I love rock and roll. Whoops. 20 minutes.
Wow, cool.
Done.
And you're still getting, how long ago did you write that song?
Over 20 years ago.
And you're still getting a pretty substantial income from it, aren't you?
Well, Britney Spears just covered it, so next year would be a good year.
Yeah. Go ahead.
And if you're posing a very deep question like this one, and you can't, I mean, as we're talking about it, I'm trying to think of, you know, we have A, B, C, D, E here. I'm trying to think of what things could be inside me.
Those are just examples, by the way.
Right,
Okay,
I'm just, but when we've been talking about asking questions, and sometimes while you're talking, I'm thinking of things.
Right.
And asking questions, and not coming up with even like the first thing. So you're just a technique to try to uncover that would just
Stop
be.
1 second. I would ask, what's stopping me from getting an answer? You're not used to coming up with the first thing, right? Then I would do the technique based on, well, what's stopping me from coming up with an answer? And then do that exercise for 20 minutes and write down every thought that comes to your mind. Break it down to it, you know, to like the most fundamental or basic components. I mean, just break your questions down as you know, as far as you can. In fact, kind of a rule of thumb, I'll give you a rule of thumb that I use when you know, in my consulting work and my coaching, is that one, when people when people call up, I help them identify the challenge. That's going to be in relationship to whatever they desire, their goal. Create a process. In other words, how we're going to get there. And then break the process down to its smallest incremental steps. And then just take one step at a time. And so that particular formula you can use for any particular trading skill that you want to learn. Any trading skill at all. If you put it within the context of that formula, if you can think to yourself, you know, I'd like to be able to trade breakouts. I'm not a good breakout trader. That's something I haven't spent any time really, you know, any time teaching myself how to do. So at the time when I'm ready to, you know, to get to the point where I want to, you know, acquire this skill of being an excellent breakout trader, I will create, that's my challenge, I'll create a process, I'll break the process down to its smallest incremental steps and take one step at a time. Another example of that would be a trader that comes to mind that I worked with many years ago. He owned some construction companies down south. He was a guy in his late 50s at the time. You can imagine the kind of guy that would own construction companies, let's say in Dallas, okay? And he'd been trading bond futures and just getting wiped out. So he thought, you know what, he's going to come up to Chicago and show these bond traders something. And bought a seat at the Chicago Board of Trade. I'm sorry, I'm laughing. Anyway, he bought a seat at the Chicago Board of Trade and went into the pit to trade and found out that it was just a little bit more violent and athletic than what he could have imagined. But anyway, I'm sorry. But another one of these situations where someone told him to call me, and so we did, and we spent probably, I don't know, maybe a week or so, a week or a week and a half, where one of the problems he had is he really didn't even know how to define support and resistance, and I was using point and figure charts at the time, which I think are really good, by the way, but there isn't really much software where you can, I don't know of any software that really does true point and figure charting anymore. But anyway, so what I did is I helped him be able to identify support and resistance within a 8 to 10 tick range, okay, in the bonds. So when we got to the point where he was comfortable and we thought he could do this, for the next day, we had support, we had resistance here, support here, and here was the deal. Okay, this guy's a multi-millionaire, Here's the deal. This was the task, and we broke the process down, smallest incremental steps, right? The task was, fortunately, task was for him to buy one bond contract at support, and hold on to it until it, if it came to support first, and hold on to it until it came up to resistance, sell it out for the profit, and then, you know, sell to, and that was it, okay? He was supposed to risk 3 ticks, $100, okay? That's all he was. Now that was the task. He just had to go in, and unfortunately for us, in this particular exercise, the market, you know, opened up somewhere in the middle right here, and so when the market came down, was coming down to, I don't know what this price was. Let's just say it was 09. The market's coming down to 09. He starts getting panicky and thinking that it's not going to get there. Number one, and so he bought them at right around 11, and then when it hit 09, he's thinking it's going to keep on going, of course. He sold it out for a 2-tick loss. It bounced off 9, went back up to 19, okay? And then he did the exact same thing. You know, came back to the office and was thoroughly exasperated and frustrated with, you know, with what happened, right? So the next day he went down there and did the exact same thing. And then after that, I didn't hear from him. And I didn't hear from him because he didn't want to have to account to me for the fact that he couldn't do this. Because, you know, what are we talking about here? We're talking about $100 risk. That was it. I mean, this is really genuinely less than chump change for this guy. So, so I didn't hear from him for about 2 weeks. And then I get a call. Well, as it turned out, after 2 or 3 weeks, maybe 3 weeks, after 2 or 3 weeks, what had happened is that he had gotten pretty good at identifying support and resistance. And he'd also gotten pretty good at buying them at 9, let's say, or selling them at 19, but he was still getting out at 10 or 11 and not holding on, you know, for the full range. So he's only getting a 1 to 2 tick profit. And what was really exasperating for him is that in many cases, it turned out that 09 in this example was the low of the day. Or he'd look back at the end of the day and say, you know what? I bought the low of the day and only got 1 tick. I bought the high of the day and only got 1 tick. So his solution to the problem, what do you think his solution was? Oh, yeah, absolutely. Yeah, not double up, triple up. Okay, he's a 1-lot trader. Now he's going to be trading 25 or 50 lots, okay? And actually, he'd made some money. He'd made some money in that 2 or 3 weeks. You know, he'd made maybe a couple $1,000 doing this. So yeah, now the problem is, you know, going from a 1-lot trader in the pit to doing 20 or 25 or more, you're dealing with a whole different range or a whole different set of people. And, you know, it's just not easy to step up from 1 to 20. It's just based on the dynamics of the way the pit itself works. And I knew he was going to get his ass handed to him. There wasn't any doubt in my mind about it. I didn't say anything to him. And I said, hey, go ahead. And so it wouldn't have made any difference if I said anything to him or not. So, and that's exactly what happened. He lost all the profits he made, plus another $2,000 or $3,000, and then he said, okay, like this, okay, I'm ready, what do I need to do? Based on the formula I just gave him, what would you tell him to do? You tell me now, if you're in this situation, you're in my shoes, and he's asking me, what does he need to do to resolve this problem? What? That's right. Why can't he wants to stay in his winning trade? What's the process? We know the challenge. Create a process. Break the process down to its the smallest incremental steps. Because this is stuff you're going to need to do on your own anyway. You tell me what I told him.
Assuming you tell him to do what you told him in the first place. You can't do that.
Well,
not at that point, but he hasn't done what you asked him to do.
You're close, but I added one other dimension. Louis close. What other dimension, let's say, or factor or criteria did I add to originally what I told him to do that would solve this problem if he'll do it?
Maybe move his stock.
Sell half.
The stock.
Sell what?
Sell half.
Sell half?
Well.
No, we're going back to what Louis said. Go back to trading 1 contract.
Oh, right.
Okay?
You move the stock to a level that you're comfortable. You trade the stock. move, so your dog is giving back everything. It's supposed to be.
That's a real tough thing to do. You know, we're talking about a pretty small range in the first place, and a lot of the up-down movement in an 8-tick range is just going to be noise. So you'll end up getting. You can't. I don't think you could do a trailing stop in this kind of a situation. You trailing stop, you got to give the market a little bit of room. Use trailing stops when you're trading higher time frames. So that would be. I don't think that would be difficult. And I'm not a big fan of trailing stops anyway. But we'll tell you why later. Go
Gotta
ahead.
do it 20 times, that's what he ingrains the pattern.
Well, yeah, but if you add one other factor to this, that would not. What we want to do is this. Keep in mind that what we're dealing with is mental energy. We're dealing with conflicting energy that conflicts with his desire or goal to hang on to that trade, right? That's all we're really talking about. When he buys support, we do not know if it's even going to get up to resistance. But the whole idea was it doesn't really matter because all he's really risking to find out is $100 anyway. So it's either it gets there or he gets stopped out. If it gets there, he reverses, and it gets down here, or he gets stopped out, one or the other. But if you add one other dimension to this, it will that could force him to confront these conflicting forces. Because in essence, all we're really talking about is petting the dog. This distance right here is the dog. Now we know the kid, as a child, you know, it would be almost impossible to teach a kid this kind of a process where not impossible, but it would be difficult because they wouldn't understand the underlying dynamics. But with an adult, at least, you can say, okay, here's the situation, here's the resistance, let's say, that you want to neutralize. That means you're going to have to confront it. What would cause or force him or cause him, if he wanted to confront that resistance on a moment-to-moment basis? Add one other factor, one other rule in here, and the process goes really quick. Can you think of anything?
Write down what his thoughts are.
No, he's in the pit.
Fully accept the laws.
Well, that's something we're going to work on. That's something that's going to happen as part of this process.
We never dealt with the belief that he has conflict with, right?
Not really, no. But we really, in this case, we don't even have to know what the belief is. We don't even have to know why he can't hang on. I mean, I know why he can't hang on, but it doesn't make any difference. Whether he knows or I know, it doesn't make any difference. You can actually think of a process that would cause it to all go away by doing something. Anybody come to anything come to
Walk
mind?
out of the pit until his price comes back.
Close, very good.
Stop order?
No, walk out. No, I didn't tell him to walk out of the pit. Quite the contrary. However, you're close by adding time, adding a time dimension. In other words, the market comes down to 9. He gets in. He doesn't get stopped out. He's got to stay in that trade for, let's say, 10 or 15 minutes, or it hits his point, or whatever comes first. So in other words, what I wanted him to do was actually get into this trade, turn around and look at the clock and deal with his uncomfortableness, moment by moment, second by second. And the more that he could do it, the more that he could, let's say, be in that uncomfortableness, the faster the energy neutralized. Because if he didn't get stopped out, then basically he was in a winning trade. And he was letting the market unfold in his favor. And the more that the market unfolded in his favor, he was actually creating an experience that directly conflicted with his resistant energy. Just like remember yesterday the example that all dogs are dangerous? Not all dogs are dangerous, okay? We've got energy dynamics. So the more that he faced that clock and faced his uncomfortableness second by second, minute by minute, the faster the energy dissipated. So if he could only do it 5 minutes the first time, well, great. Maybe the next time he could do it 6. And the next time he could do it 10. And the next time he could do it all 15. And then at some point, it didn't matter. He could do it. It was simple. It really was. It was a simple exercise. Not easy to do, but it was a simple exercise. that's basically what you guys are going to be doing for any trading skill. You're going to think of a process, break the process down to its smallest incremental steps, and do the steps. Because you don't have to know, in many cases, you do not have to know what the conflicting energy is. On the self-sabotaging beliefs, these are exercise, the kind of things you're going to need to do to neutralize self-sabotaging beliefs. In some cases, you're going to have to know what it is. But in some of the trading skills that you need, the basic fundamental trading skills, you don't necessarily have to know. But you do have to create a process to neutralize it. And this is a perfect example of what I mean about using your trading to accumulate skills. He was trading, but he was trading for the specific purpose of being able to hang on to a winning trade. Now, if you have a problem hanging on to a winning trade, you know what? This exercise would work for you too. Jake?
I'm gonna try. 15 minutes. The maximum is 20 minutes.
Could I ask you what typically?
Oh, yes, you may.
What is the belief? I mean, I have the same damn problem, but and we'll try that, but what if you dealt with the belief? What is the typical belief that keeps people out of winning trade? It's simple as what you have.
Well, in his case, it's because he'd been burned so many times, where the market came back and took his profits away, where he didn't take it, because he never had a consistent or methodical way of taking profits. That's all it really was for him. It's just his past experience of being burned so many times. Where he thought the market was burning him, of course. It was his inability to trade consistently or have a consistent methodology that was burning him. Go ahead, Greg.
Being patient is one of my challenges. Let me use this example. If it starts going up to 15, I have this.
I got a solution for you later on.
Okay.
What time is it, John?
9:15.
I'll take a little break. Okay, where did we leave off? Anybody remember?
20 minutes.
20 minutes. Oh, I left off with the exercise. That was it. About creating processes.
Bond trader friend.
Yeah. Anyway, he went on to make quite a bit of money trading bonds, and then went to Thailand in the late 80s and early 90s to trade their stock exchange, and took advantage of a lot of people down over there. And I kind of lost touch with him probably about 8-9 years ago, so I don't really know where he's at right now. Okay, you've got information. Now, I want to precede what I'm about to tell you right now with kind of a caveat or warning. I'm just exposing you to technologies or ideas, or let's say methodologies that you can use, but I suggest that you don't, until you've acquired some sophistication in working with us in these areas and expertise, that you do this with somebody who knows what they're doing, a professional.
I don't know what you're talking about.
Well, I'm going to tell you, you'll see in a minute, okay? What I'm doing is, all I want to do is I want to give you an idea of what's possible and the kind of things that you can do. Again, these are things you're certainly under no obligation to do any of this stuff, but if you do decide to do it, I very strongly recommend that you do it with a professional, someone who knows what they're doing. Here's what I mean. We left off doing journal work, writing questions, getting answers, discovering yourself, and discovering things that hopefully will pique your curiosity to ask another question. You're accumulating all this information about yourself. What are you going to do with it? Where are you going to go with it? Well, there are a number, again, there's a number of different things that you can do, a number of different techniques or technologies. There are all kinds of self-help books that you can buy. One of the things when people even ask me to suggest certain books, I'm a little reticent to do so. What I suggest that people do, instead of me recommending what book might be good for you, you find out what book is good for you by going to, a pretty large self-help bookstore and finding out by just what book resonates, okay? As you're going, as you're perusing all these books that tell you what you can do and how you can do it and everything else like that, which books resonate? Which books are you attracted to? Books in essence, because once you open yourself up, here again, this process of opening yourself up by asking questions, you will be naturally guided from this area right down here. You will be naturally guided to pick up the book that's right for you in that moment. And that's the one you buy. And that's the one you start with.
But it's how I got my first book about Larry Williams. I went to one of those bookstores because I was interested in training, and Larry's book almost fell off the shelf, hit me on the head.
Somebody pushed
How
it.
I made $1 million first year of training.
What I'm saying to you is that in many cases, the kind of stuff that's going to happen once you open yourself up will seem quite magical. It really will. They'll just come into your life. You'll be attracted to it. You're not thinking about, not analyzing, not judging. You just find yourself picking up this book and go, oh, yeah, okay. Yeah, this looks good. That's the one you buy. The one that feels good is the one you buy. See, so for me to recommend a book, it's like I'd have to, tap into where you're at and, I mean, not that I haven't done that sort of thing, but it's just that you're better off just doing it on your own. Does that make sense to everybody? So one of the things that you can do, and this is an example of a trader that I worked with a while back, and who had a pretty abusive relationship with his father, and it hampered. He was I'm not going to even tell you where he traded or what the deal was, but anyway, he found a lot of the things that he had learned as a result of his relationship with his father quite troublesome, not only in his life, but of course for his trading. And what I'm going to do is I'm going to read you an exercise that I gave to him. And basically, this exercise, you can see, this is his work right here. It's about 20-some pages or more. It's all single-space typewritten. And these are experiences that he wrote about with his dad. Okay? And the exercise was to write the experience and then boil the experience down to, in other words, distill it down to like a couple of sentences about what he learned about the nature of his relationship with the world as a result of these experiences, and then boil it down to a one-sentence belief, if possible. Because what we want to do when we're working with these kinds of with these kinds of beliefs that we want to neutralize, we want to distill it down as much as possible so that we have something tangible to work with. Because when we've got something tangible to work with, there's even another exercise that I'll give you, again, that I'm going to caution you to use, not on your own, but with guidance and with help, that will help you neutralize that one sentence concept when you get it down to that. But basically, what this exercise is about is this, is that you're not going to change your memories of your experiences. It's not the actual memory that you're changing, but you're going to change the context of the memory. In other words, you can put the memory into another framework from negative to positive. Because remember that life, the universe, life, okay, offers us a range of experiences. And this line cannot represent that range of experiences because those experiences are virtually infinite. Now think about this. Those experiences are infinite. And every moment is truly unique. But if we start out with, a particular experience in a particular category from a negative perspective, we will continue to perpetuate that negative cycle over and over and over again until we break the cycle, which means it's something that we have to choose to do. We will think that cycle is reality, just like the boy and the dog example. Dogs had a range of experience, a range of possibilities to experience happiness, joy, satisfaction. These are all states of mind. This child can only perceive one possibility out of a range of possibilities. That one possibility was his reality, and something that he would vehemently defend as being the true and only reality. So I could say that every negative cycle that exists in each of our lives, and all of us have them, because none of us grow up pain-free. Nobody grows up pain-free. Everyone gets hurt emotionally. Everyone. And the problem is, if we don't reconcile our own pain, we will pass it on to our children. We have no other choice. As much as you might want to try not to, and even be conscious of it, unless you have a way to reconcile the pain, you will pass it on. And then your children will pass it on to their children. And it'll keep on getting passed on until somebody decides to break the cycle. And the cycles don't get broken until somebody decides, until it makes a conscious choice to work on it. Now, you don't have to, again, you don't have to change the memory, because you couldn't anyway, really. I mean, I guess people can. They can, they can create another memory and try to deny the original one. But you can put it into a different context. You can put something from a negative into a positive context. If, for an example, as in this case, as in this particular person, if he were to go back and had a way, let's say, or even imagine a way of accessing the child, the person that he was when these experiences happened, and explain these experiences in a different context, in a context that wasn't emotionally painful, well, you think that might be helpful? Because that's in essence what he's doing. He's explaining these experiences in a context that would help this, let's say, 8 or 9-year-old create a set of memories about this, that even though the actual experience themselves didn't change, the context of the experience changed from negative to positive. Because there's something else, another dynamic here that you need to really understand, and that's the dynamics of forgiveness. People generally think of forgiveness as doing something like to forgive the kind of pain that someone else